So today we have to continue with the incomplete records. Okay, so let's continue. That is next. So today we do incomplete records, NPO and other stuff. Okay. So what is incomplete records? So generally whenever we are doing accounts, we follow double entry system of accounting. Okay. We have all that process for doing accounting: journal, ledger, trial balance, P&L, balance sheet. We do all that. This is normal double entry system of accounting. But sometimes some people they won't do this because they don't know all this journal entry, debit, credit, and everything. So what they do, they'll maintain only certain aspects of transaction. Okay. Now, say suppose he's a normal trader, what he'll be doing? Debit to credit journal entry. Yeah? No, what will he do? Whenever he makes the payment, he'll record the payment. Whenever he receives the payment, he'll record the receipt. That's all. Maximum he'll maintain his cash book for receipt and payments. Next, he'll maintain personal accounts. And if he has given, say suppose he has one creditor named Nagraj. So what will he say? Paid to Nagraj 10,000 rupees. That is maximum that he'll record. Do you think he'll bifurcate every transaction into expense, income, etc., etc.? No. Maximum one is cash book, and one more aspect is your personal accounts. Okay, nominal accounts is not maintained in incomplete records. Correct. That is one thing you should know for incomplete records. That is basically incomplete records. Now, what we have to do is whatever available information we have to prepare balance sheet and P&L. That will be our job in incomplete records. But here in incomplete records, we'll not call it balance sheet. We'll call it statement of affairs. Why? Because balance sheet is a result of proper accounting. Correct? No? Incomplete records or the statement of affairs what we are preparing from the available records. It is not a result of proper accounting, so we cannot call it balance sheet. What in incomplete records we are passing journal entries and Allah no. Directly we'll draft statement of affairs and P&L. That's why it's not called balance sheet. It is statement of affairs. Understood? That is one thing. Then how do we see when we don't have information? How do we estimate it? And how do we get the data? About bank transactions, you can get data from the passbook. Then what about fixed assets? Fixed assets you can directly go count. Okay. Then take a estimated depreciation. Say suppose this year you are preparing incomplete records. You bought a machinery 4 years ago. So what will you do? Take the estimated value, depreciate it for 4 years, take that value only for balance sheet. Correct? Then what will we have in the accounts? We'll have debtors, creditors, all these. How can I get their balances? Huh? Personal. Ask them only, directly go and ask them. Directly go and ask the debtor and creditor only. They will directly give the balances, put that balances. Then what do we want? Then any other expenses information, you'll be having it in your cash book only, passbook. Then directly go get the confirmation from debtor or creditor. What about bank loan? Bank loan, you can directly go to the bank and ask the details, interest and everything you'll get there. Anything else we need? Capital amount invested will not, we don't have any proof. Though I am the owner, some people say, hey, you're the owner, you know how much you have put. That is one way. But capital also includes what? The profits over the years. How will I know that amount? So generally for capital, what will we do? In questions, what will happen? Mostly they would have given opening balance sheet. Correct? From opening balance sheet, can I find out capital? Or sometimes they would have given opening assets and opening liabilities. Can I find out opening capital from there? How? Capital is equal to assets minus liabilities. By doing this, you'll get the opening capital also. Then we are done with capital. What else? That's all. These are the data that we find. Then one more thing what you have to understand in incomplete records. From opening capital to closing capital. Say suppose opening capital is 50,000 and closing capital is 1 lakh. Now this is increased by 50,000. Now tell me what can be the reason for this movement. One, the profit you directly add to opening capital. Then whatever additional capital you invested, that would have added. Then whatever drawings will be there, that will be subtracted. Correct. Now, these are the 3 possible reasons why your opening capital can move till closing capital. This is one more thing that you should know. Based on this, questions will be asked. Correct. Opening capital plus profit plus additional capital minus drawings is equal to closing capital. Okay. This is one formula. Then what in incomplete records? Then one this thing suggestion what I would give is in incomplete records, wherever you are not finding some information. Now, for example, we are preparing trading account in incomplete records. Now we want purchases. In the whole question, they have not given you purchases amount only. What is the next thing that you do? Then they would have given you the creditors information. So what you have to do? Put a creditors ledger. Okay, put the other available information they would have given. Pakka. Opening balance, closing balance, amount paid to creditors will be given. That means the balancing figure will be the amount of purchases that you have made. Okay, like this only. If you don't have some information in the question, then what you have to do? Immediately draw a ledger relating to that. For example, if you want something in sales, which ledger will you put? Creditors ledger. If you want something in purchases you'll put creditors ledger. Something you have to find in the question. You have to find out some cash expense or cash receipt or cash sales. Something you have to find out. Which one will you put? You put cash account or bank account. Okay. If you're not finding something, they would have given not directly but indirectly via these accounts. If you prepare these accounts, there will be one item missing. Say suppose you want to find out cash sales. That item is missing in the question. The moment you put cash account in debit side, you'll be having some difference. That debit difference is nothing but what? Yeah, cash sales. So whenever something is not given, put the concerned ledger. Clear? Any doubt? So these are the things that we should remember while solving for incomplete records and other chapters. Say suppose your bills of exchange, depreciation, all that knowledge is very relevant here also. Normal knowledge. Okay. With that said, that is about incomplete records. Then the normal process is preparing trading P&L and balance sheet. That's how we'll do normally, which we'll do now. Okay. Okay. So I'm taking RTP question of September 2025. So we'll see. Okay. So let's see. Freeze limited gives you the following information. So they've given various information. Let's see what to find out. See, it is not about your trading, P&L, balance sheet, nothing. Only two things they've asked you. They require to calculate total sales and total purchases, nothing else. Okay, we'll see. Tell me where will we use each of the things. Now for sales we need data, and for purchases we need creditors. Correct? No, simple. So debtors opening, creditors opening they have given. We'll do one thing. We'll start solving the question one by one. We'll see. Okay. First we need debtors account. The opening balance of debtors is 1,57,500. Which side will it come? Debit side. So two balance got down. 1,57,500. So then we have creditors opening balance. We'll open creditors account also. The creditors opening balance is 1,82,250. So it comes in the credit side because it's a liability. So by balance brought down 1,82,250. Then bills receivable received during the year. So what do you understand by this? Received during the year. So these are bill drawn. So bill drawn on drawee. That is debtors. So what will be the entry whenever you draw the bill? BR account debit to debtors. So what is happening? Your debtors is getting credited. So here it will come in the credit side of debtors by bills receivable account. It is 1,05,750. Next, bills payable issued during the year. That means the bills that we have accepted. So what is the entry when we accept it? Creditors to bills paid. This will come in creditors account. So creditors is getting debited in the journal entry. So to bills payable account, 1,19,250. Then cash received from customers. Entry bank account to debtors account because they received from debtors. So it will come in credit side of debtors account by bank. How much? It is 3,51,000. Then cash paid to suppliers. That means entry. It is creditors to bank. Here it will be debited to bank account 3,87,000. Next, bad debts recovered. Whenever you recover bad debts, what will be the journal entry? See, what is bad debts recovered? Something you have already written off. Some bad debt had happened, you had already written off. Wait. Something you have already written off as bad debts. Later that guy gave off the money. Okay. Now tell me what is happening. Your money is coming. So cash or bank account debit to bad debts recovered. Okay. Debtors now will not come. Debtors is written off now. Whenever bad debts was written off, debtors is gone. I've booked the loss. Now suddenly that guy gave. I did not expect. When he did not give, I booked the loss. When he suddenly gave, it's an income. So bad debt recovered is an income account. So entry is cash or bank account to bad debt recovered. So will this affect debtors or creditors? Will this affect debtors or creditors? No. So this has no effect. Next. Next, what do we have? Bills receivables endorsed to creditors. We had some bills receivable, we have endorsed it to creditors. So entry, whenever I am endorsing my bills receivable, my creditors is decreasing. Creditors account debit to bills receivable account. So this will affect creditors account. So creditors to bills receivable. So it will come in the debit side. To bills receivable. How much? It is 6,750. Okay. Next. Bills receivable dishonored by customers. You are holding the bill, it got dishonored. So you'll reverse the entry. What is the reverse entry? It is debtors to bills receivable. So it will come in debtors account. Debtors to bills receivable. 11,250. Then discount allowed by suppliers. And there are suppliers and the creditors. They have given us discount. So it is creditors account debit to my creditors is decreasing now if they have allowed me discount. So creditors account debit to discount received. So to discount received. How much? 15,750. Then discount allowed entry. So my debtors is decreasing since I have allowed discount. So discount allowed account debit to debtors. So by Discount allowed 20. Next, endorsed bills receivable dishonored. So I had endorsed to whom? To my creditors. Now that got dishonored. So the entry is it is debtors account to creditors. See what has happened. You have raised the bill. That bill you have endorsed. When you endorse the entry was creditors to bills receivable. Now creditors balance is gone. Debtors balance that is also gone now. Whenever you raise the bills receivable, both are gone. The moment dishonor happened, both came back. Debtors debit, creditors credit. They both came back because you had cancelled both. Clear? So dishonor entries debtors to creditors. How much? 675. This will come in both. Debtors to creditors means debtors is debited. Debtors to creditors 6750. Then this will also come in creditors account by debtors 6750. Done. Next, sales return. So sales return has the effect of decrease in sales because of so decrease in sales, further decrease in data. So entry will be sales return account debit to debtors account. Your debtors will be credited. So by sales return, how much? 24,750. Then bills receivable discounted. Do you think this will affect the debtors account? What is the entry? Bank account debit discount to bills receivable. It's not affecting debtors or creditors. So leave it. Ignore. Two entries to be ignored. Next. Cash sales that however we'll add, it will not affect debtors account. Because what is the entry for cash sales? Cash to sales. So this will not affect. Cash purchases. Then debtors closing balance. 184. 500. So it will come in this side. By balance carried down 184. 500. Then your creditors balance closing balance is 213,750. So 2 balance carried down 213. Done. Now we have entered everything. So balancing figure will be credit sales. Guys, whatever you get in debtors account is what? Credit sales, that's all. Okay. So how much? It is 2 sales account. It is 141. Check that something is missing. Right, 22, 50, 24, 750, 1,800, 11, 250, 6750. Discounted bill is this one. Okay. Discounted bills receivable. Discounted bills this one. Yeah, most probably. 4,500. Bills receivable discounted. Discounted bills receivable. Both cannot be same. I think this is just discounted. So if bills discounted is dishonored, then what is the entry? So it is debtors to bank. Correct? No. You have to pay, we have to pay to bank, and debtors is supposed to pay to us the moment dishonor happens. So debtors to bank. So that one entry will come. Debtors to 4,005. Now the balancing figure will be sales. It is 5 lakh 6,000. 5 lakh 6,000. 4 lakh 8. No, it is correct. It is correct because I have also tallied. This is just the credit sales. Correct now. This is just the credit sales, but we want total sales, so we have to add cash sales also. The total sales is equal to 5,06,250 plus how much was cash sales? 379. So this is the total sales. Okay. So it should be 885 375. This is about total sales. Now let's come to total purchases.
6,07,000.
It is
6,07,000.
balancing figure 6,07,000. If you see, you have the gap in credit side and purchases will come with side, credit side only. Simple. So that is the purchase. So total credit purchases, 607,500. Cash is 445,050. 445,050. So total purchases 1,52,550. Then like this only. If they have not given you the sales figure, you have to put debtors or creditors ledger like this. Correct? So done. There's one crazy question in January 25 RTP. We'll solve it.
So if they separately don't mention cash sales, should we consider everything was on credit?
Yes. Simple. If they have not given cash sales, one more thing what you have to do now in incomplete records. Now what you do, you put debtors ledger, you got sales, you assume credit sales is the total sales. Then you prepare cash account also. If cash account is properly matching after all the transaction, that means credit sales is the total sales. If you have something difference in the cash debit side, it is better to assume that is cash sales. Or what we'll do is, we'll assume it to be money received from debtors. Then whatever comes in debtors account is credit sales. Anyway, answer will be same. Okay, both assumptions are right. Received from debtors, because of which credit sales will increase. Correct? No? Any assumption would do. See, what you have to keep in mind is double entry. No matter what assumption you do, double entry effect should not alter. Do whatever assumption you do. So we'll do this. It's a January 25 incomplete records question. It's nice. So, following is the incomplete information of Moonlight Traders. The following balances are available as on 23 and 24. They have given you land opening, closing, plant and machinery, office equipment. Debtors opening they have not given. Creditors closing they have not given. Creditors for office expenses, opening, closing they have given. Stock opening they have not given. Closing they have given. Next, loan both they have given. Bank closing. See, bank closing they have not given. That means what we have to do? Pakka bank account we have to prepare. No doubt. And wherever you have question mark, those accounts you have to prepare. No doubt about it. Then collection from debtors. This will come in. That means obviously they have not given us sales figure. We have to put debtors account. We'll use this there in debtors account. We'll use this in debtors account. Then payment to creditors for purchases. You'll use this in creditors account. Then payment of office expenses excluding interest on loan. So interest on loan is not there here. Okay. So payment of office expenses, where will this come? Exactly. If you see here, we have creditors for office expenses. So payment will be shown in this ledger. Then balancing figure will be what? The actual office expenses made. Correct? It is like credit purchase only. How you find out purchase as a balancing figure? You are finding out office expenses as a balancing figure. We have opening, closing, we have paid during the year. The remaining is the actual office expenses incurred. For that calculation, this will use in Creditors for office expense. Then salary paid. Anything about salary? Nothing. So it will go to normal. It will go to your P and L and your this thing, cash. Selling expenses. It will go to P and L and your cash. Cash sales. It will come in trading and it will come in cash. They have told credit sales is only 80% of the total sales. This will be used in. This will be since we are putting debtors account. I think we'll find out credit sales from there only. This information is given for something else. We'll see. Credit purchase they have given. We'll use it in creditors account. Then cash purchase is 40% of the total. Can you tell me how much is the cash purchase now? See, they have given you credit. If 40% of the total purchase is cash, then 60% is credit. And you know what is credit? 5,40,000. So 5,40,000 divided by 60%, you'll come to know the total purchases. Simple, huh? If this is 40%, then credit is 60%. 5,40,000 is 60%. What is 100%? It is 9 lakh. So total purchase 9 lakh. GP margin they have told 100 plus 25%. That means this is a percentage on. This is a profit percentage calculated on cost. Okay, cash purchase is 360. Okay. Then GP margin is cost plus 25%. This 25% is calculated on cost or sales. Sale
on cost.
See, they have told cost plus 25%. Actually, this thing. They have clearly told cost plus 25%. So 25% is calculated on cost. So here only they have told cost plus 25. Yeah, GP margin is always calculated on sales. Okay, if nothing is given, you assume that. But here they have clearly given it is cost plus 25. You take that. If this line if they are not given, then it is calculated on sales. Discount allowed again for debtors ledger. Discount received for creditors. Then depreciation for P&L and balance sheet. Other adjustments on 1/10/23. Oh, this and all that given. They sold a machine having book value of 40,000 as on 31/3/23. See, here they are testing depreciation also within incomplete record. So on 1/10/23, I am selling a machine which had book value of 40,000 on 31/3/23 at a loss of 15,000, and new machine was purchased on 1/1/20. But for how much? Somewhere we have to find this out. Bank, where we can possibly get it. Have they given us machinery account details? See, they have given this. If you put this plant and machinery account, then balancing figure will be purchase of. If you put all other things correctly, the balancing figure will be the purchase of new machinery. Okay. Then office equipment was sold at its book value on 1/4/2023. At the beginning of their only they have sold this 1,05,000. So sold at its book value. So entirely gone. So if entire 1,05,000 is sold, then what is it? We still have closing balance. How? Again, that is a new purchase. Okay. Then loan was partly repaid on 31/3/24 together with interest for the year. So we have loan account. If you put the loan account, we'll understand how much is repaid, how much is the interest. Any information about interest paid? Nowhere. Together with interest for the year they have to. Okay. We can only calculate, okay, because when the repayment happened in the end of the year. See, if the repayment is happened at the end of the year, that means interest will be calculated for the whole year. So interest can be calculated by us only, no problem. You are required to prepare trading P&L and balance sheet. Okay. Let's start. So in the books of Moonlight Traders. So first we do trading account. Then we have profit and loss account. Then balance sheet. So whichever ledgers will require, one by one we'll put it when required. Okay. So the problem in incomplete records is we don't know in which order to solve, which account to write. So there is a problem. So that's why what I would do is, what I used to do is simple. What we have to put trading P&L and balance sheet. No, you start doing trading account. Wherever you get a problem, you solve that problem then and there. Simple. Now first, what will come first in trading account? Let's take the help of this. You have bank account, you have to prepare bank account also. So okay. So two opening stock will be there. Have they given opening stock?
No.
Ayyo, first day, damar. How can we find out opening stock? What way? How? See, the thing is, there's no way to find out opening stock. Only way, generally in other questions also, if you have observed, to find out opening stock, what we'll put is trading account only. If we get all the other aspects in trading account, including gross profit, then we can find out opening stock. So leave opening stock like that. We'll see what we can do. So next, we need purchases. For purchases, of course, they have not given purchase, but we have to prepare creditors account. So let's start.
So we have found out 9 lakh.
Purchases, sir.
9 lakhs. 40% was cash.
Correct. Oh, they have given, no? Yeah. So guys, they had already given. Your total purchases is 9 lakh. Credit is 5 lakh 40. Cash is 3 lakh 60. So this we have. So it is cash 3 lakh 60. Credit 5 lakh
40.
ಏನು ಇದೆ ಇದು ಡೈರೆಕ್ಟ್ ಆಗಿ ಕೊಟ್ಬಿಟ್ಟಿದ್ದಾರೆ. Have they given us creditors opening closing? Oh, but we have to find out. So since we have all the information, we can find out creditors. So we'll do it offer. We'll find out creditors balance. Working note 1. Let's put creditors account. Particulars. So opening balance. They have given it is 95. Then what are the information we have?
Trading purchase.
The total credit purchases that we have made, it will increase creditors. So credit side by yes. How much is my credit purchase? Should be 5 lakh 40. Then we have discount received and all. Then what else will affect creditors? Here, this is payment to creditors for purchases. This will come in the debit side. Because whenever I make payment, creditors decreases. So to bank account, 5,25,000. Then what else will affect? This thing. Discount received is because we will discount is given to us by creditors only. So entry is whenever discount is received, creditors is decreasing. Creditors to discount received. So creditors to discount received account. Later this should go to P&L. You should not forget. How much? 4,500. We'll do one thing. I have this FOMO of I'll pakka forget. So what I'll do is better is I'll write it up by receive 4,000. So next. So everything about creditors done now? Yes. So that's all. Hopefully this is the closing balance. How much just calculate?
So 1,05,000.
So it is 1,05,000. So prepared. We have found out the closing balance also. Later we can use this for balance sheet. So purchase is done. No hints of purchase returns. So total is 9 lakh. Then what do we want? We want sales. Sales though they have not given. No. 100% they would have not given. We have to prepare data. So opening balance of data. Oh, you don't have the question. So opening balance is only not there. Cash sales is given. What? Oh yeah, they're given. So if cash sales is 20% of total sales, then what is credit part? It should be
1,50,000.
this thing. Total
Total.
is 12 lakh. Then this is 10 lakh.
12 lakh 50,000.
So the total is 12 lakh. My total sales is 12 lakh 50,000. So this will put it.
So do you take cash sales also in data?
No. Only credit sales.
Why is
Debtors will be there only for credit sales now.
only
Simple. So this should be 12,50,000. And we might require debtors opening balance for what? For finding out opening capital. So however we have to find out opening debtors and question mark is there. So we have to find out. So what we'll do? We'll finish it off that also. So opening balance not given. Then we have sales, credit sales. 2 credit sales. How much is credit sales? Then we have discount allowed. Discount allowed will come here, and this is also expense. Discount allowed is 5,000. So this will go to P&L. So I'll put it off now only, or else I will forget. How much?
5,000.
Okay. So then, have you received any money from debtors? Collection from debtors? 9,25,000. So by bank account, you received money 9,25,000. So I think everything related has come. So what is the closing? I mean, closing balance also they have given. How much? Carry it. How much is closing balance? If you see 2,25,000. That means how much is opening?
1,55,500.
It should be 1,55,000. We found out this also. So come back to trading. So we found out sales. Have they given closing stock? How much? If you see, they have given us. This is 65. Now see, if I get gross profit, I can find out opening stock as a balance sheet. Can I get gross profit? Yes, they have given us the margin. So to gross profit is how much? 25% on cost. So on sales and rate should be 25 by 125. How much? 25 and 20%. 20% on sales. So 25% on cost means 20% on sales. So how much is our sales?
2,50,000.
2 lakh 50,000. Because my GP margin is 20% on. All of you don't know how I made this 20% on sales. Yesterday we have discussed 2 examples and all we did. No, assume 100, same thing. So 2,50,000. We got gross margin also. So how much is opening stock?
1,65,000.
Opening stock should be 1 lakh. Done. So we're done with trading account. Now gross profit will bring it down by gross profit brought down. It should be 2,50,000. Okay. Now one by one. Debtors account. So let's focus on expenses, whatever will come in P&L. So with the given information, what all should come? First, we have depreciation. I thought, okay, we'll figure out depreciation first. Then we'll do all other expenses. So come to working note number 3. Okay. On land, no depreciation. Then on plant and machinery, we'll see what all we can get. Plant and machinery account. So what is the opening balance of plant and machinery account? 2,20,000 rupees.
Closing balance 3 lakh.
Closing also they have given. By balance
3,20,000.
3,30,000. Then what information do we have with respect to this? Any sales? Here. On 1/10/23, they sold machine having book value 40,000. So whenever there is sale, okay, first we'll do sale entries. Come back to depreciation chapter. First step, sale. Well, first give depreciation till the sale. First we'll give that. When is it sold? On 1/10 and the 6 months depreciation. So on 40, which method are we following? WDV only.
10.
But they have not given us the cost component. No?
40,000 book value.
That is book value. Book value as on 31/3/23. Opening it is. I could have purchased that machinery 3 years before. Who knows? WDV is the best method here. So assume it to be WDV. So 10% into 40,000 into 6 by 12.
2,000.
So it is 2,000. So by depreciation account, 2,000. Okay, we give depreciation till date of sale. Then
Loss.
whatever. Then bank. Okay, by bank. How much have we received?
15,000. By profit.
Okay, wait. They have told loss of 15,000. And there are 40k.
Yes.
There is book value. So what is the book value as on date of sale?
38,000.
38k. 38k. They have sold it at a loss of 15. That means how much they have realized? 23k.
Bank 20.
So bank money received to bank is 23,000. So 23,000. Okay.
Loss 15.
Then loss should be 15, which comes this side by loss on sale. How much?
15,000.
This will go to P&L. This loss. We'll put it off now only.
Depreciation.
That will also go.
So then there's another purchase.
2.
Last one.
Then we also have depreciation.
So another purchase.
Huh?
Another purchase.
But just to ensure that I will not forget. So, loss have taken, bank have taken. So all the sale entries is done. Sale entries done. Then what I have to do? On the remaining assets, I have to still give depreciation. Then my P&M account is complete. Now, what are the remaining assets? Working note or working note. Okay. Now, what happened? The opening balance was 2,20,000 rupees, and out of this, 40,000 I have sold. So minus 40,000.
1,80,000.
The remaining is 1,30,000.
30,000.
1,80,000. So on this 1,80,000 I have to give. When did we do the purchase? In the end of the year. No? New machine was purchased on 1/1/20. Correct. In the end of the year. So why is that information relevant? Why is that information relevant? Why did I ask that? Is the new machine purchased on the end of the year?
So it's not at
To calculate it.
1/1/24.
3 months where is the financial year.
1. Oh, we have 3 months. That means depreciation for 3 months will be there on the new machinery also. So that we have to find out. It became that loop problem, no?
So maybe if you prepare a bank account.
Yeah. In bank account, whatever credit side will get, no, maybe that is the amount invested for new machine. Then we can put it here and find out. Because two problems happen. Only if I put all the depreciation, then the balancing figure will be correct. Okay. To find out this depreciation on the new machinery, I need the new machinery's value. So maybe we have to go to bank account. So we'll prepare off bank account. What? Easy question. But it's a good question. No. Even if you do one question, it should be sufficient. 2. They given us the opening balance 25,000. So ಈಗ ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಫುಲ್ ಮಾಡಬೇಕಪ್ಪ. So ಎಲ್ಲೆಲ್ಲಿ ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಬಂತು, we'll see here only where our bank account is. See here in creditors we have paid to creditors 5,25,000. So it comes in the credit side. By creditors, then from debtors we have received 9,25,000. So 2 debtors. Then Amy. Then here in plant and machinery towards sale we got 23,000. So 2 plant and machinery sound should be 23,000. Then where else? This 3 done. Then we have to see the question. See, office equipment also we have sold. So there also would have got some money. Correct. So for that we'll prepare office equipment. But or else they have also told that it is sold at its book value. So what we'll do? We'll take 1,05,000 as the money received towards sale. So 2. Then what else do we have? We have cash sales, huh? We have cash sales. There we would have received 2,50,000. So 2. Then we have cash. That is how much? It is
5,40,000.
Cash purchase, no, 3 lakh 60. Okay.
So what is the office equipment purchase?
Huh?
Office equipment is purchased. So
Yeah, even I'm feeling there's something about office equipment, man.
So it is only that balance is sold, not completely. 20,000 rupees.
Where did we have that information about office equipment?
So attachment
Was sold at its book value on 1/4/2023. As on 1/4/2023, we have the balance of 1,05,000 at its book value. Okay, wait, I will put one office equipment. We have depreciation sold at its book value in the opening only. This is machinery, no, this we'll leave it. Okay, that means whatever difference is there, no, I think that is only the sold is what you're telling us.
Then what is depreciation?
What I thought was opening is entirely sold off. Wait, we'll put one ledger account and we'll see. So office equipment account. Opening balance is 1 lakh 5,000 and closing is
85.
85,000. Then they have told depreciation of
15%.
15%. So opening balance.
1 lakh.
Yeah, man. On opening only they have sold it off. So how much they have not told it? What nonsense.
So maybe the value is missing.
Yeah, I think. Because they should have told how much is sold. Without that, how can I find out? No new office equipment is bought, no? Just do the calculation. 85,000 divided by 85 into 50. Just see how much you get here.
85,000
Divided by 85 into 50. How much you get?
15,000.
15,000. Balance 85 after sale and depreciation. So, what we can do is, we'll do one thing. See here, this because of this one line. Depreciation to be provided. That means depreciation is not yet provided. This is the answer for the plant and machinery account also. They have not yet provided depreciation. We have to provide it. And then in 85,000, depreciation is not yet provided. I think now we can get it. So come here. If 85,000 means 1,05,000 was opening, 85 remaining means sold is that is sold off in the beginning only. Leave it. So the money that we have realized is 20,000. Okay. So depreciation will be. So depreciation will be only on 85,000. So 1,05,000 minus 8 minus 20. Depreciation will be on 85. 85,000 into 15%. So it is 12,000. This should be the depreciation. Because of which this balance will become even more lesser. How much? You have to take sale also now. By bank account 20,000. That means actual closing balance is 72,250. Then so your depreciation became 12,000. What office equipment? So what has happened here is depreciation they have not passed only. So whatever opening and closing balances they have given in the question, their depreciation is not there. So in the opening you have 1,05,000, closing you have 85. Depreciation and all is not there. So they have told office equipment is sold at book value. That means how much is sold? If in the opening 1,05,000 is there, in the closing 85, then how much is sold? 20. Depreciation we are charging now. Depreciation was not charged. They have told in the question. Depreciation to be provided. So that means 1,05,000 and 85 is not affected by depreciation. So amount sold is, value sold is 20,000. And that we have realized at book value only. Correct. So how much money have they have told we have sold it for book value? Difference is 20,000. Money realized by us is 20,000 rupees. Now I gave depreciation in the working note. Okay. So depreciation came to 12,750. Any other depreciation we have calculated? No. Now we'll come to this machinery account also. This 2,000 also, no? Yeah, we'll do that.
Depreciation.
Now we'll see this question from this angle. So wait, we'll see the plant and machinery now. The opening balance of plant and machinery was 2,20,000 and we have sold 40,000. Remaining is 1,80,000. But closing balance has become 3,30,000. That means what is the difference? That is entirely purchase. Now we can easily find out depreciation on the balance. So if you've come to plant and machinery account, okay. Here you put one more thing. Opening balance is 2,20,000 minus 40,000. So guys, one thing you have to understand, plant and machinery account is not affected by depreciation. It is at cost only. So we can easily find out. So this is 40,000. 1,80,000 is remaining. But closing balance is at
3,30,000.
3,30,000. That means how much is the purchase?
1,50,000.
1 lakh. But this is purchased when? During?
1 month, 3 months.
In on 1/1/24, the 3 months depreciation will come. So how much is depreciation on the new machinery? 1,50,000 into depreciation rate is 10% into 10% into 3. So this depreciation becomes 3,750. So this is depreciation on the new machinery. And what about the depreciation on the existing? 1,80,000 into 10% into full year. That is the total depreciation on the remaining assets is 21. So this is depreciation on the remaining assets. So depreciation. So how much? 21,750. So the revised carrying balance is, because whatever closing balance they have given in the question is without depreciation. We are considering depreciation. That's why balance carried down is getting changed. 3,08,250. So if I have purchased 1,50,000, that means where would I would have invested money, no? So bank would have decreased. So by plant and machinery account. By plant and machinery account, 1,50,000 rupees. So plant and machinery depreciation done. So how much depreciation with respect to plant and machinery? 21,750 plus 2,000. This is So total is 23,750, and that is 12,750, which is office equipment. 12,750. So we are done with this. All the depreciations done now.
So what is the new closing balance? Machinery? 2,08,000 rupees.
So what else will affect bank account now? We were preparing bank account. So what else will affect?
Payment to office.
We'll see everything one by one. So land nothing, plant and machinery we are sorted, office equipment sorted, debtors sorted, creditors for purchases sorted, creditors for office expenses there. That will sort it out. So working note number 6, creditors for office expenses. So opening balance 20,000. Closing balance. What have I paid them during the year? If you come here, what have I paid? Payment to office expenses is 42. So to bank account 42,000. So my actual office expenses. Correct? No. The balancing figure in creditors for office expense will be what? The actual office expenses that we have incurred. So that is 50.
Excluding interest, so shouldn't we add interest and then pay?
No, interest will consider separately as a separate line item. Okay.
37,000.
So it is 37,000. So first, it should go to bank by office expense by creditors for office expenses. How much? 42,000. Then what will go to P&L? To office expenses. 37,000. So we are done with creditors for office expense. Stock, nothing. Then long-term loan. loan we have repaid. So we have to see that. So come here. Working note 7. Long-term loan from FDI. So opening balance 1,60,000. And closing balance 1 lakh. That means what is that remaining? That is the amount that we have repaid. So to bank account 60,000. Further, along with the repayment, partial repayment, we have also paid off interest. So that is also we should not forget. So towards repayment we have paid 60,000. So by loan, that is how much? 60. And we have paid interest also. How much is interest? By interest on loan. That we can calculate. 1,60,000 into 12%, because this 1,60,000 was outstanding for the entire year. The part repayment was only done in the end. So how much is interest?
19,200.
Huh?
19,200.
19,200. So by interest on loan upon 19,200. This is an expense which will go to P&L. So to interest on loan 19. 2. Done. Now we are done with loan also. The effect we gave in bank also. Done. Collection of debtors done, creditors done, payment of done. Salary paid we have not taken. Salary paid 32,000. So come here. It will come in P&L also. To salary 32,000, and it will come in bank also. So by salary 32,000. Then selling expenses 15,000. So by selling expenses, we are done with office equipment. No. ಇದೆಲ್ಲ ಮಾಡೋದಲ್ಲ. By selling expenses 15,000. This will also go to P&L. Selling expenses. It is 15,000. Then cash sales considered, credit sales we considered in bank also, no? Credit sales done, credit purchase done, cash purchase done, discount allowed received done, depreciation done, sale adjustment done, office equipment adjustment done, loan done. So everything we have done. See the bank account. See the bank account balance. Fast. The balance should be
1,24,800.
debit side total you tell. 95, 23, 250. Hey, this is not 105, no? Because office equipment, how much did we get when we sold it? 1 lakh 5, and 85 was still remaining. So we have sold it for 20. So this 20,000 rupees. They have not changed it off.
39,040.
It is 39,800. What is 60 rupees? There is no 40 only here. How did you get? No 60 also, no 40 also. So 39,800 is your bank balance. So which will go to balance sheet. Okay. Now let's come to P&L. It's P&L net profit. The footnote, total have to put. What is the total? It should be 36,500. Now tell me net profit. ಬೇಗ ಬ್ಯಾಟ್ರಿ ಹೋಗ್ಬಿಡುತ್ತಪ್ಪ, ಬೇಗ ಮಾಡಿಲ್ಲ ಎಲ್ಲ ಡಮಾರು. It should be correct number. It is 94,300. Okay, so we are done with P&L. Now let's go to correct. Let's go to balance sheet. First in the capital. ಅಯ್ಯೋ ನನ್ನ ಮಕ್ಕಳು ಓಪನಿಂಗ್ ಕ್ಯಾಪಿಟಲ್ ಬೇಗ ಹಾಕ್ಬೋದು, ಬಟ್ ಅದು ಅದೇನಾಗುತ್ತೆ ಗೊತ್ತಾ, ಅವಾಗ ನೀವು ತಪ್ಪು ಮಾಡಿದ್ರೆ ನಿಮ್ಗೆ ಗೊತ್ತಾಗಲ್ಲ. ಅಲ್ಲಲ್ಲ, ಟ್ಯಾಲಿ ಹಾಗೆ ಆಗುತ್ತೆ. ಇಫ್ ಯು ಟೇಕ್ ದ ಬ್ಯಾಲೆನ್ಸಿಂಗ್ ಫಿಗರ್ ಇಟ್ ವಿಲ್ ಟ್ಯಾಲಿ. ರಾಂಗ್ ಆಗ್ಬಿಟ್ಟಿದ್ರೆ ಏನ್ ಮಾಡ್ತೀರಾ? ಸರಿಯಾಗಿದ್ರೆ ಓಕೆ, ರಾಂಗ್ ಆಗಿದ್ರೆ so it is better to do it via this. See, if you are taking balancing figure in capital, of course your balance sheet will tally. In any case it will tally. So you have to do
ಅದೇ ರಾಂಗ್
the opening. ಅದೇ ಟ್ಯಾಲಿ ಆಗ್ಬಿಟ್ರೆ ಮಾರ್ಕ್ಸ್ ಸಿಗಲ್ಲ, ಕರೆಕ್ಟ್ ಆಗಿ ಮಾಡಿರ್ಬೇಕು. ಕ್ಯಾಪಿಟಲ್ ಅಮೌಂಟ್ ಮ್ಯಾಚ್ ಆಗ್ಬೇಕಲ್ಲ. ಬೇಗ ಬೇಗ ಓಪನಿಂಗ್ ಕ್ಯಾಪಿಟಲ್ಗೆ ಎಲ್ಲೋ ಓಪನಿಂಗ್ ಅಸೆಟ್ಸ್ ತಗೊಳ್ಳಿ. Liability rupees. I want all the openings. Patta. First land 5 lakh. Land 5 lakh. Then plant and machinery 2 lakh. Plant and machinery 2 lakh. 20,000. Then office equipment 1 lakh. 5,000. 1 lakh. Do it along with, add it here only. Then debtors we found out. Debtors opening how much? Debtors opening 1,55,500. Okay, 1,55,500. Debtors 1,55,500. Then we have creditors for purchase 95,000. That is liability. Creditors for 95,000. Then creditors for office expense. Same thing. Creditors for office expense 20,000. Next, clothing stock we found out. How much is opening stock? Opening stock is 1,65,000. So stock is 1,65,000. Then we have loan 1,60,000. Loan 1,60,000. Then we have bank 25,000. Bank. All assets done. Huh? How much is the opening capital?
8,90,500.
It is 8,95,500. Is the capital. So this will go here. 8,95,500. Then net profit. It is 94,300. Then it will affect against the 989,800. Then liabilities we have loan. How much is loan balance? It is 1 lakh. No? Loan is 1 lakh. Then what other liabilities we have? Creditors. Creditors for office expense. 15,000. Then creditors. Creditors we have 1,05,500. Creditors 1,05,500. Then what liability do we have? Outstanding in land. That's all. That is about liability. Assets, land 5 lakh. Then plant and machinery. We have updated closing balances. You've written it down, huh? Any one of you? 3,08,250. Office equipment. Office equipment 72,250. Then debtors 2,25,000. Debtors 2,25,000. Then we have stock of 65,000. Then long-term loan taken. Bank closing balance 39,800. Hanga 39. Tallied up.
Yes, sir. 12,10,300.
12,10,300. 12 lakh. One heck of a problem too. So it was a nice question. ಈ ತರದ ಒಂದು question example ಬಂದ್ರೆ why?
ಸರ್ ನಿಮಗೆ 1 hour 11 hour ಕೊಡ್ತಾರೆ. ಅದು ಟ್ಯಾಲಿ ಆಗಿಲ್ಲ
ಅಂದ್ರೆ I have to ಅಂದ್ರೆ you are expected to do it in half an hour, not more than half an hour.
They're out.
ಟ್ಯಾಲಿ ಆಗಿಲ್ಲ ಅಂದ್ರೆ ಇನ್ನೊಂದು
Hour.
ಮತ್ತೆ ಚೆಕ್ ಮಾಡಿ ಸರ್.
Only one thing one tricky point in this question was that depreciation only. Okay, they have told depreciation to be provided. And also it's incomplete records. They would have not provided. We should have thought that. Correct, no? So whatever opening, closing they had given in machinery, office equipment, all this were excluding depreciation. Then it makes sense. Okay, please remember that is the one tricky point here. Rest all I think it was still fine only. Rest all if you see, we were able to do it. I think it was still fine. So one more question on incomplete records. Most of you were asking for incomplete records only. So last one question from May 2025 paper we'll do RTP and we'll finish here. We have done 3 RTPs, no problem. Adhe nanu heliddu. This time RTP is very easy. See, it was January 25 RTP, the one which we did now. Huh? ಏನಂದ್ರೆ
ಅಂದ್ರೆ ಈಗ ಜಾನ್ವರಿ ಕಷ್ಟ ಆಯ್ತಲ್ಲ
ಹಾ
ಅದರದ್ದು
ಅದಕ್ಕೂ in relation, no need to do all that.
Sir, ಅದು credit for office expenses.
Tell me.
Credit for office expenses, opening. ಎಷ್ಟು ಹಿಂಗೆ
Creditors for opening office expenses ಸಿಂಬಲ್ ನಾವು ಫೈಂಡ್ ಔಟ್ ಮಾಡಿದ್ವಿ, ಕೊಟ್ಟಿಲ್ವಾ ಕ್ವೆಶ್ಚನ್ ಅಲ್ಲಿ? 20,000 ಇಲ್ಲೇ ಇದೆಯಲ್ಲ ಕ್ವೆಶ್ಚನ್ ಅಲ್ಲಿ. All of you, May 2025 RTP question number 11. Okay, let's start. The thing is, my iPad has no charging, so you should start. Okay, I'll join you once the charging starts. You try. You want me to send up? Shall I do airdrop?
Sir, yesterday
Man, I had sent it today somehow because the branding and all was there. No, I was like skeptical about it, so I did not check. We have same question in our material. That same question which we did yesterday, that I was about to send. No, May 2025. Put it over here only. Wait. But the thing is,
What is the trader name?
Saraswati Enterprises. See here if you can. So we'll read the question once, okay? So that whatever the adjustments is there, I'll try to tell you. You then try, okay? So let's read. Saraswati Enterprise. You can see the question on the board also. Saraswati Enterprises maintain their books of accounts under single entry system, and the balance sheet as on 31st March 24 was as follows. So first thing, they have given us balance sheet as on when? 31st March 24.
Closing balance.
So we have to prepare balance sheet for 31st March 25. So that means that is opening balance sheet. So capital and all is already there. No need to for us to calculate. If you see, it's already there. Then in the summary of cash book, they have given cash in hand, opening cash they have given. See 12,000, 12,000 matching. Can you see here? 12,000, 12,000. That means it is correct. I do all this nonsense stuff. And it had helped me once, if I've already told. See, this is summary of cash book, okay? And both are matching. Why I do all this is because once when I was in BCom, I've told evening college, I mean, bad student. When I was in BCom, there was this test which was happening in BCom, okay? I was a new article, CA article that time. I simply, they had given one final account question only. They had given trial balance. Simply, I newly started articleship. No, in articleship, we had this practice of seeing whether trial balance is tallying. Then only we'll start with preparation of financial statements. Really also. So I started articleship newly, no. So in exam also I did the same thing. I checked the trial balance, and to my luck, trial balance was not tallying. So simply I wrote a note there. Trial balance is not tallying. Please give me grace marks. But only 2-3 minutes had happened. I know I was done with the exam. I was walking out. Others were like, "Hey, what happened? What happened?" Then, hey, trial balance is only not tallying. That balance sheet will not tally. Gone. And then I left. My friend, other guy, who was also a CA, he again counted and like, yeah, dude, it is not tallying. Then he told everyone. Everyone left. Then they bashed me. So like that. So all that I see here. Simply, thick put it. So they have given opening cash. Cash sales, you'll consider it in trading account. Amount paid to debtors, you'll consider it in debtors account. For finding out credit sales. Payment made to trade creditors, you'll put it in creditors account for finding out credit purchases. Sundry expense will go to P&L and cash. See, no need to put cash account again because already this cash book they have given. Okay. So sundry expenses will go to
P&L.
will go to P&L. Then drawings will go to balance sheet, subtraction from capital. Closing balance they have only given. Good. Next. Discount allowed to trade debtors will go to debtors account. Receipt from trade creditors will go to creditors account. Next. This is the adjustment of the year. Annual fire insurance premium 900 was paid every year on 1st August for renewal of the policy. These expenses are included in sundry. So what you have to do? If it is paid for 1st August, then the coverage of fire insurance will be from 1st August to 1st August. But our year ending is 31st March. So expense should be booked in the current year only for August, September, October, November, December, Jan, Feb, March. Only 9 months. But you have also paid for the next 3 months. So the next 3 months is prepaid. This 9 months should be booked in current year. So 3 months, what will you do? Remove it from general sundry expenses and put it as prepaid. Okay, only for 3 months. Then next, furniture and fixtures were subject to depreciation of 15% per annum on WDV. Then they have given you closing stock, closing debtors, closing outstanding expenses. They have given closing outstanding expense. Have they given opening outstanding expense? Yes. They have given us opening balance sheet only. See?
Yes.
So that means what you can find out from there.
Expenses paid.
See, opening is there, closing is there. Towards sundry expenses you have paid 93105. So the remaining balancing figure will be the expenses actually accrued. It should go to P&L. Correct? Then trade data, however, they have given. GP ratio 10% on sales. Okay. That is to find out. Maybe they have not given you opening stock. Huh? Where have they given as GP percentage? Closing stock is also given. See here, opening, however, they have given the balance sheet. Opening, no? Purchase, sales. Why have they given as GP percentage? Yeah, we can however find out now. You know, in a matter. Okay, you start doing, we'll see where we'll need the. See, whenever you're in confused, no, start doing it. You'll know where you'll require that information. Okay. So don't worry before starting the question only. You start doing it, somewhere you'll know, oh no, that's why they have given GP percentage. Trade debtors ಇದೆ, opening ಇದೆ, closing ಇದೆ, cash sales ಇದೆ, amount paid to debtors ಇದೆ.
Sir, closing debtors
ಕೊಟ್ಟಿದ್ದಾರೆ. ಕೊಟ್ಟಿದ್ದಾರೆ 4 point. Creditors ಕೊಟ್ಟಿಲ್ವಾ? Then calculate. Then other information they would have given.
Purchases.
ಅಲ್ಲಿದೆ matter. Guys, now we know why GP percentage they are given. Put trading account, gross profit you calculate based on sales, purchase you find out as a balancing figure. See, if you start doing it, understood how we are getting purchase figure. You have opening stock, you have sales, you got gross profit, you got closing stock also. Purchase you will find it as a balancing figure.
pool at 77,000. Pool at 77,000. Discount 5,400.
Anyone gross profit?
1,39,300.
Oh, ready now. Nisha. One lakh 39. Oh, that was on percentage. No, okay. How much is your purchases?
12,59,700.
Correct. You're in the right path. You can go ahead.
Sir, what's the purchase?
It came now. 12,59,700. Anyone net profit?
Sir, expenses.
P&L alert.
I didn't put it first of
That expenses includes fire insurance premium. That is paid on 1st August every year. This year also they are paid 1st August. So if they are paid on 1st August, coverage will be for 1 year, 1st August to 1st August. But our accounting year ends when? 31st March. Andre, as expense it should come only for 9 months. August, September, October, November, December, Jan, Feb, March. Yeah, 9 months. 1st August, no. Andre, April, May, June, July, 8 months. 4 months. 8 months it will be for, and then it will come in the current year expense. Remaining we have also paid for 4 months in the next year. That is premium. I mean prepaid. When have you paid the premium? 1st August and 1st August.
Sir, in the balance sheet they have given prepaid insurance 300.
Correct.
So you should consider that also.
Yeah.
Two prepaid insurance.
In the opening, in opening we have prepaid.
Prepaid insurance.
300 prepaid.
Opening balance.
So
Previous year.
that previous year prepaid and the current year it will be expense. So you add that in the P&L. And current year, this thing, prepaid, you put it in the current year balance sheet of rupees 300. How much is the total premium that we have paid?
900.
Total is 900. Oh, then okay. Then how much will be current year expense with respect to premium? 600 with respect to the current payment and 300 with respect to the previous prepaid, which is becoming expense now. If you see the opening balance sheet, there is prepaid expense now.
So expense and balance sheet left.
Wait, I'll see.
So 900 is for 12 months. The insurance that are paid.
Correct. That's what I'm telling you.
900 is for 12
So 900 into 8 by 12. How much?
600.
675 plus 900 into remaining 4 by 12, which is 375. 625 plus
675.
plus 275,
25.
225, which is 900. So current year total insurance expense should be 900. Guys, wait, I'll tell
So
you.
prepaid is 300.
Wait. Prepaid is 300. huh?
The opening balance sheet.
In the opening.
Prepaid in the opening balance sheet is 300. huh? Then that should be for 4 months only, no? Then it should be 300 plus current year should be 900 into
8 by 12.
8 by 12, which is so 600 plus 300. 900 should be the hey, what one number you are telling 100. Wait. Now let's clear it off. Aram se first in the. ಆಯ್ತಾ ಎಷ್ಟಪ್ಪ ನಿಮ್ದು ಈಗ ಇನ್ಶೂರೆನ್ಸ್ ನಾವು ಪೇ ಮಾಡ್ತಾ ಇರೋದು 900 rupees. Previous year opening prepaid ಎಷ್ಟಿದೆ 300. Now previous year prepaid will become current year expense. So that you have to add 300. Done. Next, out of the 900 are paid. Out of that, only for 8 months it pertains to this year. 4 months again is
Next year.
prepaid. So 900 into 8 by 12 is how much?
600.
So 300 from opening prepaid, 600 current. So total that will come to expenses 900. The remaining 300 will go to prepaid expenses of current balance sheet. Correct? Months you had taken wrong, no? Huh?
I think 6.
It is 8 and 4.
600.
So can we show it together? Like adding the
Yes. Better disclose it off. No, it is better. There only. Don't put working note. There only. For calculation, you might have to prepare working note because invigilator should know. You have done all this. Helps for your step marks. P&L. Expense pay ಮಾಡಿರೋದ್ರಲ್ಲಿ ಇನ್ಶೂರೆನ್ಸ್ Brother, how will you get the total expenses from where? From outstanding expenses. How much did you get?
Previous year outstanding
19,000 to 90,000.
It is 90,000. 10.
previous year outstanding year pay ಮಾಡ್ತೀವಿ ಸೊ ಅದನ್ನ ಮತ್ತೆ ಕರೆಂಟ್ ಇಯರ್ outstanding ಆಡ್ ಮಾಡ್ಬಿಟ್ಟು ಇಯರ್ ಲಾಸ್ಟ್ outstanding ಮೈನಸ್ ಮಾಡಿ
EF prepaid na balance sheet.
Outstanding.
ಯಾವ್ದು ಕೇಳ್ತಿರೋದು ಇನ್ಶೂರೆನ್ಸ್ ಪ್ರೀಮಿಯಮ್ ಔಟ್ಸ್ಟ್ಯಾಂಡಿಂಗ್ ಎಕ್ಸ್ಪೆನ್ಸ್ or you are doing like that. No, you have to prepare an outstanding expense ledger to understand. Prepare outstanding expenses. Put whatever is paid towards expense is how much? How much is paid? You have paid 93,105, but that includes your insurance also. I wanted to separate that. So 93,105 minus 900. So how much you have paid? 92,205. So how much will be the expenses that is actually accrued?
Plus 6,750 minus profit.
Why 6,750?
Previous year also.
That is opening. You just put the ledger. Opening of the outstanding,
Debit side.
credit side, outstanding, liability. So 6750. Then closing is 5520. How much did you pay? Pay will come in the debit side, 92205. So that means the expenses actually accrued is
9220.
net profit
44,000.
44,000. Correct. 90975. Guys, general expenses includes insurance premium. Exclude it, and then do your expenses working.
The balance in current year.
Current year expenses accrued. Just like how we find out purchases from creditors, like that we are finding out expenses from outstanding expense. How we find out purchases from creditors, we are finding expenses from outstanding expense. Shall we start? So will you tally the balance sheet also? Done, na? Tally done. Done, na? Rate are the closing ಕೊಟ್ಟಿಲ್ವಲ್ಲ rate are closing ಕೊಟ್ಟಿಲ್ವಲ್ಲ you have to calculate. Correct. Net profit. So anyone? Insurance premium? Simple. The premium will cover us from 1st August to 1st August. That means for current year for which we are preparing financials, how many months is covered? Only 9 months. So out of 9 or 8. August, September, October, November. 8 months. So out of 900, only 8 months pertains to current year. Remaining 4 months is for next year. That will be nothing. That 300 went to assets, 600 is in expense. Done. Now, if you see the opening balance, there is also one prepaid asset there. Prepaid insurance. That means what? Last year we have done the same thing. So that becomes expense this year. So this 600, plus that 9. That is how much?
163.
Correct. How many of you tallied the balance sheet? 2 up. 1, 2, 3. So one by one, I'll start discussing the figures. Okay, fast. Now we have got gross profit of 1,39,300. Then the general expenses. All of you, how did we find general expenses? Huh? It's okay, tell me. Put outstanding expenses ledger. You have opening outstanding expense, closing outstanding expense, and amount paid towards outstanding. If you put everything, you'll be having remaining. The remaining is the expenses. While taking the payment, what you have to do? Don't consider insurance 900 that we are considering separately. So from the payment, exclude 900 rupees. So how much is the expense that is actually accrued? That is 90,975. Opening, closing, amount paid, balancing figure is expenses. Next we have insurance. Insurance 900, we all know how. All of you, insurance adjustment pakana. You want me to repeat? Then we have, what else we have in P&L? Then we have discount allowed 5,400 given in the question. Depreciation we have to calculate. 15,000 into how much percent? 15%. 15,000 into 15%, 2250. Then you have discount received 4250, which will come in the credit side as income. So net profit will be 44025. Then now we are done with P&L account. Come to balance sheet. Let's come to this side. Capital opening they have only given in the opening balance sheet 67,500. But plus current year net profit 44,025. Then do we have any drawings? They have told drawing 36,000 will be subtracted. Creditors closing balance we have to find out. For finding out creditors closing balance, one thing we don't have is purchases. Purchases you got it from trading account as a balancing figure. How? Because you had GP margin, you found a gross profit, you got purchase, you got creditors also. Then outstanding expenses. Closing balance they have only given in the question 5520. Coming to the asset side, furniture 15,000 minus depreciation, it comes to 12,750. Debtors closing they have only given. Stock closing they have only given. Bank closing they have given. Bank closing they have given, and prepaid insurance we had of 300 rupees. If you put all this, your balance sheet is tallied. Clear? Huh? Done, huh? Tally, huh? So, all of you done? Can you go to the next part? Okay, we'll take a break. Post break, we'll continue. Okay. I want all of you to be here by 11:10. Okay. Right. So we continue. So we're done with incomplete records. Next, let's start with non-profit organization. Okay. Same thing. We'll be solving 3 questions from 3 different RTPs for NP also. Before that, some introduction. So, what are non-profit organizations? Where they don't have the motive to make profit. Their motive is what? Their primary motive is what? They will make profit. Just because they're NPO, they'll not make profit. But simply surplus will come there. See, they will make profit, but their primary motive is what? Whatever they want to promote, art, culture, etc., etc. You know, our Gata, we're the biggest non-profit organization here. Don't know. He's into yoga and all. Hey, don't take the name down. I say it's also an NPO. Again, I'm not taking any risk. Again, they're also making good profits only. Every year they collect so much exam fees. You know, again, the registration fee. So from us also they'll collect. Even after passing every year membership fees they'll collect. Whatever you read, know that membership they collect every year from us. Then for COP also, you have to practice. Every year for that also they'll collect. Okay. So I don't think it's an NPO, but they'll do a lot of other things. You know, for member development, they arrange different seminars and all. They use that money for that. Okay. So they are making profit, but they're again utilizing it for members only, us to develop us. So they're there. So NPO, their primary motive is not to make profit. It's to promote their culture, art, or whatever intention, social intention they have to promote that. So as far as final accounts is concerned, what do we prepare as part of the final accounts? Receipts and payments account, income and expenditure account, and balance sheet. See, here only little nomenclature is different, okay, but everything is same. What is receipts and payments account? It is as good as your bank or cash account. What will receipts and payments record? All the actual receipt in cash or bank, or actual payment in cash or bank will come in receipts payments. It's as good as your combined cash and bank account. Like your cash or bank ledger. Now, if you see a cash or bank ledger, you have opening balance, closing balance, and all. Correct? No. Even in receipts and payments account, also same thing. Your opening bank or cash, closing bank or cash will come in receipts and payments account. It is nothing but your cash or bank account, guys. If you understand what is cash or bank account, receipts and payments account is that. Nothing different. Okay. Then we have income and expenditure account. Like how we have P&L in this trading account, and I mean in your non-manufacturing or manufacturing entities. Like that, accrual basis of accounting is done in income and expenditure. Okay, all the incomes which are accrued but not received will come in income and expenditure. Okay, any payment that is accrued but you have not paid will come in expenditure, like how we do in P&L. We follow accrual basis in income and expenditure, and balance sheet is balance sheet, same thing. Assets, liabilities. Here instead of capital, we'll have capital fund, because to start NPO, no one want to come and start NPO and put capital and all, raise, take out profit, all that they're not. So how will they collect money? They collect money from via donations and all. Okay, so that will come in capital. Now these receipts, there are many kinds of receipts here. One is your capital fund, that is amount invested by the members who started this NPO. Say 5-6 people, they want to promote drama. They came together, they put some money as donation to run the NPO. So that will come in capital fund. Okay. Then we receive something called as subscriptions. Okay. Before subscriptions, we receive something called as membership fee. What is membership fee? To take the membership in the organization, the members who are coming in, they have to pay one-time fee. This one-time fee is called membership fee. Now tell me, is it in the nature of capital or income to the NPO? Capital, right? Because one time we are receiving, it will directly go to capital, unless something else is told in the question. If the question tells, put it into, consider it as revenue, you consider it as revenue and put it in income and expenditure, or else it will be there in capital. Then you have subscriptions. Subscriptions or renewal you'll pay every year. Since you're paying it every year, this is considered as income of the NPO, and it will come in income and expenditure account as an income, subscription receipt. Okay, this is what is the subscription? To keep your membership active, every year you pay subscription. That is subscription. Then you have legacy. What is legacy? There's one guy in the deathbed, or before, he feels that he'll die in 1 or 2 weeks. Now we have so much money. So he'll tell, I want to give 50% of my total assets or wealth to this NPO. He'll write it in the will and he'll die. Then that money NPO receives. So that is called legacy. Tell me, is it in the nature of capital or income? It is capital. It will go to capital fund, add legacy, because he has given in the nature of capital one time. Every year will he has he told to contribute to NPO one time. So it's a capital fund. Then what do we have? Honorarium. What is honorarium? That is not a receipt, that is a payment by NPO. Now say suppose there is a NPO organization and its activity is to promote education among CA students. Okay. Now they'll call me to give one lecture. But the thing is, now I'll ask my fees and they'll be like, sir, we are one NPO, sir. We are not collecting money from students. Then what will I do? Papa, I will go there. They also cannot send me empty-handed. No, something they have to give. That nominal amount is called honorarium. Okay. No, they will not give my actual fee. Maybe 10 or 15% of my actual fee. That is, as they have told in the name, honorarium. For honor, khali kel kalsidra makkar alva. For honor, for respect, they are giving some money. That is called honorarium. Okay, that is an expense, normal expense. It will come in your expenditure side of your income and expenditure account. Then what do we have? Then sometimes what happens? The donations we have. Okay, in donations, tell me, donation, is it an income to NPO or will it come in capital?
Capital.
See, it depends. In donations, we have two kinds. One is specific donation, and one more is general donation. Okay. One more is general donation. Now, whenever general donation, the people coming with the NPO, they'll give whatever possible, considering their capacity, they'll give some money. That is called general donation, and general donation is considered as an income. Specific donation means that guy who is giving the donation will give specific instruction as to use this money for the specific purpose. And so he'll give the purpose also. For example, he'll give you 5 lakh rupees and he'll tell you have to, build a building for the students in this NPO with this fund. You should not use it for anything else. These are called specific donations. Now, how do we do accounting? For specific donations, we do a different kind of accounting called as fund-based accounting. So what we'll do is, whenever we receive money with respect to this specific donation can be bifurcated into two. For what purpose are we using? If it is for capital purpose, under building, or build a ground, sport ground, anything for building a capital asset. If the purpose is for building a capital asset, then what we do? Whenever you receive this donation, entry will be bank account debit to that specific intention fund account. That means in our case, building fund account. Bank account debit to building fund account. Correct? Then what will happen? You got the money, then you will build 5 lakh rupees you have got. It is appearing where in the balance sheet, this building fund? It will be appearing right next to your capital fund as building fund. Whenever you received bank account debit to building fund, 5 lakh, it is appearing. Then you will use this fund for construction of the building proper. Now, you constructed the building, now building is already there. What to do about building fund? Now, what you have to do is, you have to empty this building fund now. So, what I'll do is, this is ultimately income. Why I am not considering it in income is because our matching concept. Okay, we have always told income and benefits, income and expenses should match in income and expenditure. Now, if you build a building will come for 5-10 years. I thought, is it okay to recognize the income only in the current year? No. What I'm doing, whenever I receive, I've put it in building fund. I'm not recognized income. Once the building is complete, once I start charging depreciation on that building, okay, I will start bringing this building fund to income in the ratio of depreciation every year. Say suppose 5 lakh is the total building and depreciation per year is say 1 lakh. Useful life is 5 years. And how much money is there in building fund? 5 lakh. So every year, assuming every year 1 lakh will come to depreciation. Similarly, from building fund, same ratio, 1:1:1:1. So how much is there in building fund? 5 lakh. 1:1:1:1 under 1/5. How much is 1/5 of 5 lakh? 1 lakh. So 1 lakh you'll charge to depreciation and 1 lakh you'll bring it from building fund to IND. Understand? This is called fund-based accounting for capital receipt. In specific donation, They are telling you for what purpose to use. One purpose is for capital assets. One more purpose will be for revenue. And they tell from this you have to give scholarship only. You have to give this fund should be used only for scholarship purposes. Is it capital purpose? No. Scholarship for an NPO will be expense. So what we'll do? First, whenever you receive, same fund-based accounting. So what will you do? Bank account debit to scholarship fund account. You'll do. Now where will this come and sit? Just next to your capital fund. Then you are actually giving scholarship from that money. What will be the entry you will pass? Though scholarship is an expense, you will not bring it to income and expenditure. What you do is, since you are giving scholarship, your money will be decreasing. So to bank account and debit scholarship fund only. So in this way, what will happen? Whenever you distribute the entire scholarship, scholarship fund will automatically go. No need to do that capital thing here. Correct? So if it is for revenue purpose, when you receive it, bank to scholarship fund, and when you expend it for that purpose, scholarship fund to bank, you do it within that fund account. If it is for capital purpose, receive it, build the capital asset. Then when you are charging depreciation, also bring the fund to income account in the ratio of depreciation. Okay. Now you can ask me one question, sir. Here, the building fund is coming to income and expenditure, ultimately, at least in the ratio of depreciation. What about that scholarship fund? It's not even coming to income. Guys, if you see, the effect is same. Okay. If at all you did not do scholarship fund accounting, what you would have done? Money received you would have considered in income side. Scholarship you would have considered as expense. 5 lakh income, 5 lakh expense. Nullified now. Will that have any effect on profit? Now in the fund-based accounting, does it have any effect on accounting? No. So the same thing is happening. Bring it to income, show a scholarship as expense, same thing. Or directly do fund-based accounting. When you receive, bank to fund, when you pay off, fund to bank, same thing. Both are same account. So that is about your fund-based accounting. All of you clear? Okay. NPO, then final accounts. What else? So these are all the basic things that you should know to start with, and then we'll prepare our normal final accounts with same. Only thing is P&L badlu here it is income and expenditure. Cash or bank account badlu here it is receipts and payments, then balance sheet. And here we'll not call in profit, we'll call surplus and loss and deficit because it is NPO, non-profit organization. Apparently we cannot call it as profit. One more thing. Now say suppose there is one NPO, like a club or anything, and this has a separate trading activity. Okay. Now take that Gata place example. Okay. He does many other things for the promotion of yoga, but also he has a separate e-commerce business, which is a separate trading activity. When it has a separate trading activity, what to do? How to consider income of that business? Because you have opening stock, closing stock, everything. What you have to do is, for that separate e-commerce business or for that separate trading activity, prepare one trading account. I thought only for that activity. Opening stock, purchase, sales, closing stock, everything you do, find out the gross profit. Once you get the gross profit, directly take this gross profit to income and expenditure account in income side. I thought whenever there is a separate trading activity for NPO. If you are normally doing business, do normally, no doubt. Clear? All of you. Then we have most crazy thing that will work as a trick in your NPO is your outstanding, advance, all that, prepaid, correct? That is one thing. So let me give you clarity with respect to that. Okay. Plus marbeka, minus marbeka, is a question. Okay. Same logic, guys. Okay. Subscriptions you would have received in the current year from your members. Okay. As per accrual concept, maximum income that you can book is, say, suppose there are 500 members. 500 members, and subscription fee for each member is 100. So what is the maximum subscription that can be booked as per accrual? 500 into 100. That is 50,000. Correct? No. Will you wait for him to pay all that? No. We are following accrual basis of accounting in income and expenditure. So if only I will book off the subscription because I have given the, I've keep the membership active for this year also. I have done my service. So I will book it off irrespective of cash receipt. Okay. The accrual basis we are following. Now sometimes what will happen? Some members they will pay off the subscription in advance, whereas some people will not pay only. Just because they are not paying Will I defer my income recognition? No. Just because these people have paid early, will I book it off now only? No. I will do it properly. Now, sometimes what would have happened? First case, we have normally received for current year. You will book it in current year. No confusion. You have received for current year, you booked it as income in current year. No confusion. Second possibility, some people they have given advance, and then for future years also they have given now only. Okay. Now, say suppose we are doing the accounting for 23-24. In 22-23 only some people have given advance. That will be appearing where in their balance sheet? In previous year. It will be appearing in their liability previous year because they have received in advance. But for current year it will become income. So what I have to do? In question they'll ask, how much is the subscription that I have to recognize in the current year? Recognize and that means accrual basis they are asking. So what you have to do? Take the total subscriptions received during the year. Okay, whatever. Now in this received, what all can be there? Current in this subscription received in the year, many things can be there. One thing received for current year, one thing received of previous year, and the previous year they did not pay. Previous year membership they are paying now. One more thing is advance. They are paying for future years. Now from the subscription received during the year, previous year advance will be there. Previous year outstanding, whatever was there, they are paying it now. Will I include it or will I not include it? I will not. I will subtract. Why? Because as per accrual, it will be already included in the previous year. Now there will be previous year advance, and then I've already received for current year in the previous year. This what will I do? Add, because last year I have not shown it as income. This year I have to show it. So what will I do? Outstanding of previous year I will subtract. Advance of previous year I will add. Then there are certain subscriptions which people are supposed to pay in the current year, but they have not yet paid. What will they do? Outstanding of current year. They have to pay, they have not yet paid. I will add because accrual basis. Then for in the current year, they have paid for future years. What will I do? Minus because I'll book it in the next year. That's all. For all, even for expenses, the logic is same. Okay. Previous year prepaid expenses. I'm telling. Previous year prepaid. What will you do this time? You will add it because it is prepaid last year. This time it will become expense. Previous year prepaid, you will add. Current year prepaid, minus. Previous year outstanding, you will minus. Because previous year outstanding, you have already considered in the previous year. Again, you will not consider. Current year outstanding, same. So current year outstanding, we will add. Current year advance, minus. Previous year outstanding, we will minus. Previous year advance, we will add. ಅಷ್ಟೇ ಇದು ತುಂಬಾ ಸೈಕ್ ಮಾಡ್ತಾರೆ ಯಾಕೆ ಅಂತ ಗೊತ್ತಿಲ್ಲ ಓಕೆ ದಟ್ ಇಸ್ ಆಲ್ ದಿಸ್ ಇಸ್ ಆಲ್ ಯು ಶುಡ್ ನೋ ಫಾರ್ ಯರ್ NPO. Now we'll take the question. Okay. Now we'll come to this one only. Incomplete records. We are doing January 25 RTP. Okay. Financial statement for non-profit organizations. All of you can see the question now. Okay. The following is the receipts and payments account. So they have given receipts and payments account, which is as good as cash or bank account. Let's just see, they have given you opening balance, they have given you closing balance. Then they have given additional information. We'll come back there. First, we'll see. Here we have received subscriptions, sale of refreshments, andre the small snacks that they'll give. And if you see, there is also supply of refreshment. That means what?
Refreshment.
Towards purchasing of that refreshment, you have paid 18,250, and towards sale, you have got 22,000. Let me see if there is any adjustment with respect to that. Nothing. Okay. So that means generally in NPO, what practice we have is if it is an expense or income pertaining to same activity, we will show it in one side as net off. Andre, I will not show this as separate expense. I will not show this as separate income. What I will do? In income side, I'll show sale of refreshments, and the income from refreshments is 22,000 minus. Hey, 22,000 minus.
18.
It is 18,250. Okay. So 22,000 is 18,250. Directly I'll show the income. I'll net off. This is the practice that we have in NPU. Then entrance fee they have given. What will you do about entrance fee? Capitalize it or income. If nothing told, you have to capitalize. You have to see the adjustment. See, they have told 50% of the entrance fee to be capitalized. If they had not given this, fully capitalized. Now 50% will go to income, 50% will go to balance sheet. Then interest on investment we have received it at 7%. It's an income. Salary, wages, expense. This we have already considered. Sports equipment.
Asset.
It's a asset. We have purchased sports equipment, so that will go to asset. Telephone charges, expense. Electricity charges, honorarium. This is the closing balance. This will go to balance sheet because cash or bank. Then following are the assets and liabilities as on 23. That means opening. They have given us opening. Maybe for what? To find out. For finding out capital. And also for subscription workings and all. Okay. We have assets, opening balance 32. Subscription in arrears. Now if you see, total subscriptions we have received in the current year is 23,000. And if you see, we have outstanding subscriptions of, this is outstanding subscription of previous year. So what we have to do? We have to minus. Okay. Then this is furniture we'll consider. Okay. Liabilities, outstanding electricity charges. Again come here. If you see, we have paid electricity charges of 15,600. So total we have paid is 15,600. But we have outstanding of. So what will you do?
Minus.
Previous year outstanding you will minus. Okay. Then subscription in advance of previous year, what will you do? Previous year advance you will add. So the subscription that should go to income and expenditure is this amount. Okay. 21,650. Then they have given closing. Oh guys, they have closing also. Still not over. Wait. Subscription in arrears. Outstanding of current year. What will be? Add. So it is. Then we have advance. Advance for current year. Okay. 22,000. So this will go to income and expenditure. Okay. Then they have given us closing. Okay, we'll use it for that reason. Furniture they have given. They have outstanding electricity charges. So current year outstanding, what will you do? Current year outstanding electricity charges we will add. So 3,000. So how much will go to income and expenditure? 14,000 rupees will go as electricity expense in the current income and expenditure. Same logic we have applied. 50% will be capitalized. And fourth one, interest on the investments is being received in full. And the investments have been made on 1/4/22. Now see, investment has been made on 1/4/22 and we have received it in full. And for full year we have received. See, if 4550 is the interest that is received in full, then what will be the investment amount? 4550 divided by 7%. You'll get 60. So if you see, they have not given investments in the question. You have to calculate it like this. If that is the interest received in full at 7%, then the investment amount is 65. This you will consider as asset in both opening and closing balance sheet. Correct? You are required to prepare income and expenditure and closing. Shall we do? Okay. So how to start income and expenditure one by one? So first let's take
anything. We'll take receipts only. First we have subscription. So it will come in the it is not particular, it is. So first we have subscription. Okay. So how much subscription will come to income and expenditure? We have already calculated. It is 22,000 rupees. Then we have that will show it as net. By income from refreshments, how much? 22,000 minus 18,252. It is 37. Next, entrance fee. They have told 50% should come to income, 50% should go to balance. So by entrance, how much is 50? 26. 26 divided by, so it is 13,000. So 13,000 will come here. Then that is the income. Interest on investment. $4,550. Then we have salaries and wages 12,250. But we have adjustment. Anything? No adjustment. So two salaries and wages 12,000. Then we have sports equipment is asset, telephone charges. So telephone charges 2,080. Then electricity we have adjustment. No? So how much will go to income and expenditure?
14.
We have already calculated here. It is 14,000. Then honorarium, how much? 6,000. Then don't forget, we should still have depreciation. Depreciation can come to income and expenditure because accrual basis. And it's a non-cash expense. It will not come in receipts and payment, but we have to put it in income and expenditure account. So depreciation. Have they given any rates or something? Then how to find out? But they have given us opening and closing. So if we put those accounts, we'll automatically come to know what is the depreciation. Correct? So working note. Working note one. The first one is we have sports equipment. We have also purchased one sports equipment. That also should not forget. So put sports equipment ledger. Okay. Opening balance is 32. And we have purchased during the year. It is 2,800. So where will it come? Debit or credit? But entry sports equipment to bank account. So to bank account, how much?
27,500.
27,500. Oh, correct. It is 27,500. Then closing balance 55. That's all. Everything related to sports equipment is done. So what is the balance?
Depreciation.
So it will be 9,000. So this will come to depreciation. So we have one more, no? Furniture. Opening balance 12,000. Then any purchases? Clothing 11,000. The depreciation is 1,300. So this will go here. That is 10,000. So we have considered depreciation done. So what is the surplus? Surplus or deficit or
So deficit 2,550.
Deficit.
so it is just 2,000. Right. So by surplus is 2,550.
Deficit, sir.
Oh, right. This side only, yeah, balance is coming.
Yes.
So debit is more than credit. Yeah, it is debit. Okay. So we're done with income and expenditure. Then first thing is we want capital fund. So that's we have for that what we have to do opening assets minus closing assets. So we'll do it off here. What all opening assets will you consider? 32,000 plus you have opening cash also 8450. So consider that also. So then you have investment also 65,000. Correct? Ah? Just now we find out investment value. So how much is opening assets minus opening liabilities?
1,13,080.
It is 1 lakh.
8,080.
This will come. Correct? Ah? Others? 1,13,080. Then we have deficit of 2550. Then we have that membership fees to be capitalized. Okay, 13,000 has gone to income. So 13% should be capitalized. So membership
13,000.
it is. So total is
1,24,330.
it's membership, but it is
Maintenance fees.
total.
1,24,330.
Then liabilities. Here only we have outstanding electricity charges 3,800. Advance 4,800. Advance.
So 350.
Then outstanding electricity
3,800.
it is 3,800. Then assets they have only given all the assets. Sports equipment 50. Sports equipment 50. Then furniture
11,180.
furniture 11,180.
Investment 65.
Investment 65.
That's all. Huh? Sports this outstanding subscriptions you see. 5,000. Then we have investments of
65,000.
in the end also we have same thing. That's all. The cash balance we will be having in receipts and payments. How much? 1,001. Now tally it up.
1,32,980.
It should be 1,32,980. That's all. Any doubts in this question? So we'll go to the next one. This is September 25. No, we did Jan. This is September. Here only, da. See, one more thing which I have to tell. Huh?
So in January, it's the same.
In Jan also?
Same section.
How that? Hey, we did Jan only, Nota. How come it can be same? This is Jan. ಇನ್ನೊಂದು ಯಾವ್ದೋ ತೆಗೆದ್ವಲ್ಲ ಅದ
Sir, the sum which we did now is Jan.
correct. Yeah, now we are doing September. This one. Okay. Now if you see here, guys, see, not for profit organization you have understood. Okay. What we have not understood is accounting for professionals. Now if you see your material, okay, accounting for professionals is not covered anywhere. Okay. But every time in RTPR somewhere we have this question with respect to the profession. Professions is, you know, doctor, lawyer, CA. Aita. We have learnt accounting for business, which we are doing. Accounting for profession is very similar to accounting for NPO. Very similar, alla same. Okay. For professions also, like doctor, lawyer, CA, we don't prepare balance sheet P&L and all. We prepare receipts and payments, income and expenditure, and balance sheet. That is the practice. Okay. Idea, logic, and all is same, but here it is this thing, profession. Okay. The accounting, this thing is same, exactly like NPO. So if at all they give profession, you do NPO accounting only. Okay. Don't worry about it. If at all they give. Now we'll see. Dr. Malik will take this example for safety because they're given in September 25 RTP. That means this attempt. Still they are giving profession. That means we never know what they can ask. Okay. Dr. Malik, see, profession. Started private practice on 1st April 24 with 8 lakh rupees of his own fund. And then that is his capital. 12 lakh he has borrowed at an interest of 12% per annum on the security of his life policies. So 12 lakh rupees he has borrowed. 8 lakh rupees is his capital. His accounts for the year were kept on a cash basis. That's why we have receipts and payments. They have given us receipts and payments account. So we'll see what to do about it. Own capital will come in balance sheet. Loan will come in prescription fee. So what is prescription fee for a professional? It's an income will come in income side. Visiting fee, they'll visit a lot of universities and hospitals. For that they'll get a fee. Income. Lecture, of course, doctors will give lecture also. So income. Pension received. What is this? First of all, is it related to profession? No, but still it is coming to us. Pension received is a personal receipt of doctor. Maybe he's associated as an employee or somewhere, he is getting pension. Is it related to the practice of profession? No. So this, but we have still received here. So this will be considered as additional capital introduced. Okay, add it as additional capital. Next, medicines purchased. Now he has a clinic, private practice. So medicine purchase is what? It's an expense. Then surgical equipment. Motor car. Is he using it for business? Is the question we have to ask. Now if you come back here, come down. 1/3 of the motor car expenses may be treated as applicable to the private use of car. That means 2/3 is for clinic. 1/3 is for personal, 2/3 is for clinic. Should 1/3 come? No, only 2/3 can come. Okay. So out of this total motor car expenses, only 2/3 can come as expenditure. Motor car, this is an asset. It will go to balance sheet. Wages and salaries, expense. Rent, general charges, household expense. Yeah, like it is drawing from because it is personal expenditure. So if you come here, anything about that, nothing. And they have told one more thing here. 30,000 rupees of salaries are in respect of domestic servants. So they are home servants. So that 30,000 here, what you have to do out of total 4,20,000, 30 is drawings and remaining is expense. Similarly here also out of motor car 4,80,000, 2/3 3,20,000 is towards office and the practice and remaining is drawings. Okay. Then this is completely drawings. Household furniture, it's not even our asset at all. It is house asset. Expenses on daughter's marriage, no weightage. Then drawings only. Interest on loan, this is an expense. Balance at bank, it will come in balance sheet. Cash in hand, asset. Now, if you see, they have given closing stock of medicines in hand. So where will this closing stock come?
Balance sheet.
In balance sheet, it will come. What about in income and expenditure? Huh? How? See, total. See, in income and expenditure, with respect to goods, which should come? Simply goods purchased or goods consumed as expense? Goods consumed. So how much you have purchased? 9,80,000 you have totally purchased, but still you have 3,80,000. That means how much you have consumed? 6 lakhs. Only 6 lakhs should come to income and expenditure. 3,80,000 will come in stock because only medicine consumed is my expense. This much stock still I have. It will go to next year. Then you are required to prepare income and expenditure and capital account, not balance sheet. They have asked income and expenditure and capital. Okay. Have you done this profession problem before? No, good. Because I don't want to repeat something like it. Because even I have not done it for evening batch. But every time I don't know. Some students they send question based on this. But if you see your ICA material, it doesn't mention a single thing about profession. If you see. Weird people. Income and expenditure. Pata. Let's first come to income. This is balance sheet. These three is income. So how much? By prescription fees, 26 lakh, 40,000. Then by visiting fees, 10 lakh. Then by lecture fee. So all the income we have taken. Then this pension received is additional capital that will not come. Then medicines. Here, 2 medicines.
Consume.
That is how much?
6 lakhs. 9 lakh 80.
So 9 lakh 80 minus
3 lakh 80.
so it is 6 lakh. Then motor car expenses only
2/3.
2/3 should come. Remaining 1/3 is drawings. So 2. Motor car expense 3 lakh. 3 lakh 20. So how did we get this 3 lakh 20? 480 minus 480 into
2/3.
then see we have motor car and surgical equipment. With respect to this, depreciation should come. But anything about depreciation they have given? Huh? They have told ignore. Thank God. They have told ignore depreciation. Nice. Then now out of 4 lakh 20, 30 I have to subtract. So 4 lakh 20 minus. So it is
3 lakh 90.
3 lakh 90,000. Then rent 2 lakh 40 to rent. Then
General expenses.
general charges 1 lakh 96,000. So 2 general charges. Then household will not come. This will not come. This will not come. Interest on loan 1 lakh.
44,000.
Then
Balance.
anything else? This we have considered. Done. So how much is your profit? 2. Surplus
46. 18 lakh 46 million.
18 lakh 86.
This is which May.
Savings that 86 lakh.
ಎಷ್ಟು 18 lakh?
46.
Correct. 18 lakh 46. It is 18 lakh. 18 lakh 46,000. Then there was capital account. The capital account. Do we have balance already? See, he has started on 2024, so it's not a opening balance. It is invest. So bank account to capital comes in the credit side by bank account 8 lakh. Then we have pension received of 12 lakh. So by what will you do? Bank only. Bank account pension received. It is 12 lakh. Then
Income or expense.
which one?
Motor car expense.
That is towards receipts. Then everything is drawing. So from here, first drawing is here. So 4 lakh 80 into 1 by 3. 2. How much? 1 lakh 60. Then to wages 30,000 to them. So, to salaries 30,000.
Household expenses.
Then to household expenses 7 lakh 20. Then
Household furniture.
so household furniture is also drawings only, no? So 1 lakh.
Expenses on daughter's
Daughter's marriage 8 lakh 60,000. Just 2 lakh. 8 lakh 60. Okay, 2 less, man. Interest on loan done. Done. So what is the balance?
1,30,000.
It should be.
Net income brought down.
Oh yeah. What is, how much is the profit?
18 lakh 46.
By surplus. How much is the profit? Because profit will go to capital. That is 18 lakh. How much is your capital account balance?
19 lakh 96,000.
It is correct. So 2. Done. So next RTP Jan September done. May. May.
Balance carried out. Capital balance carried out. Closing capital. Other profit and balance. Profit and balance.
So okay, all of you. Okay. So the May 25 question is again simple one only. Or what we have to do it. This question is interesting in my opinion. We'll see that. Visible or not visible?
Discuss whatever.
Okay. Yeah, Kri. ಮನೇಲಿ ಬೇರೆ ಏನಾದ್ರು ಮಾಡಿ ಇಲ್ಲಿ ಮಾಡಿದ್ನೇ guys have sent it to the group. You got it, evening people. So I want you to try this. Then I they've just asked and balance. Receipts and payments account only if it is wrong. So see whether if it's right or
Receipts and payments account.
Allah. The fact that they have given means only it will be wrong with that, first of all. But the thing is, how will you find out whether it is right or wrong? Just see. Opening balance they have given. See. Outstanding of the last year, what will we do? Hey,
Receipts and payments
correct.
account.
Outstanding of last year we will minus, and prepaid of last year we will exactly they have done the because of which receipts and payments account is wrong. So we have to correct it. What else is wrong? Other fees, donation for building. See one more thing. That is okay. Expenses. One more thing. If you see in payment side you have loss. In payment side you have loss on sale of furniture. In receipts and payments, loss or profit and all will come up. Actual receipt and payment. So if you have sold the furniture, the money that you have received towards sale should have come in receipt sale. That's all. All that profit and loss should come in income and expenditure. Right. Correct. So if cost price is 9,000 and loss is minus 3,600, that means how much we have received. That should have come in the receipt side, but they have put it in payment side. So that means this receipts and payments account is completely wrong. We have to prepare corrected one. Okay. What all to correct? Opening balance correct. Subscription what you have to do? ಹೌದು ಇಲ್ಲೇ ಕೊಟ್ಟಿರಲ್ಲ. If not, prepare correct receipts and payments account.
The receipts and payments are actual receipts and payments. Fill outstanding prepaid ಎಲ್ಲ.
ನಾನು ಸೇಮ್ ನೋಡ್ತಾ ಇದ್ದೀನಿ. See 93,600 is the receipt. Here 93,600 and we are preparing receipts and payments account. 91,800 is the income. Agreed or not agreed? Income. So when if we are going from receipts and payments to income and expenditure, that is the rule. That is previous subtract current outstanding, add previous year outstanding, subtract. This was the rule if you are coming from income and expenditure to receipts and payments. Here what we are doing? From income and expenditure here 91,800 we are going to receipts and payments account. That means add less is correct only, no? If you have a look at it, I see that add less is correct only. 91,800. The only thing that is wrong is this 1,800 advance and all we have not considered. We have, for which year we have to prepare? 31st March 2022. And outstanding subscription as on 31st March 2022 is 5,400 rupees. That means for current year. So current year outstanding, what I should do? The 5,400. Can you see? The subscription receivable 5,400 here. What we have to do? In receipts and payments account.
Decision
Minus.
receivable.
Sir,
Add minus.
Huh?
Minus in decision.
Hey, no. They are preparing receipts and payments account. Okay. They have given us what? This 93,600 is the total amount received. Correct? Total amount received with respect to subscription. To this receipt amount, current year outstanding, what will you do?
Decision payment amount ಎಷ್ಟು ಇವಾಗ ಅಷ್ಟು ಸಾಕು.
ಏನು? But ಅದು ಕರೆಕ್ಟ್ ಇದೆ ಇಲ್ವಾ ಅಂತ ಚೆಕ್ ಮಾಡ್ತಾ ಇರೋದು. We are seeing whether it is correct or wrong. Okay. Now, simple wait. ಒಂದೇ ನಿಮಿಷ. ಈಗ how much should be recognized as an income in income and expenditure account with respect to subscription? See here, 91,800.
Only what is this?
See here, if you see, come here. How much is the income? This 91,800 is the one which will go to income and expenditure. Clear, Alivargo? Okay. Now, then what do we have? Then we have outstanding of last year received. Andre previous year outstanding. Okay, previous year outstanding received this year. This thing, will you add it or subtract it?
Income and
A, for receipt, we have to calculate total receipt. From income, we are going back to receipt. Ulta, no?
add.
Now I don't care accrual, all that shit. I will not care. How much is the received under? So outstanding of last year received this year. That means this is the actual receipt that I have to add. So plus 3,600. Last year outstanding, I have received this year. I have added. Correct. Next. Prepaid of last year. Okay. Prepaid of last year will be considered as income in the current year. But is it received this time? No. So what I have to do? Subtract. So minus
1,008.
Then again, any other information? Current year outstanding is 5,400. Will I add it? No. Current year outstanding is not received. Then nothing about it. So actual receipt is 93,600. Is the receipt amount correctly given in the receipts and payments account?
Subscription
Yes.
received in advance.
Where?
Below.
We have subscription received in advance. Have I received it in the current year? Yes. That I have to
Add.
add. So plus. So how much is my total subscription? 90. So this should have come in receipts and payments account. But how much has come? So is it correct? That only we have to correct. ಅಲ್ಲ ಇದ್ರಲ್ಲಿ ಅದೊಂದೇ ಹೌದು ಅದಕ್ಕೆ ತಾನೆ. Do you agree with the above receipts and payments account? Yes or no? No. If not, prepare the correct. That's why I'm rechecking everything. Clear? Then what else is wrong here? Subscription ಆಯ್ತು, ಅದರ್ ಫೀಸ್ ಬಂದಿದೆ, ಓಕೆ. ಡೊನೇಷನ್ ಫಾರ್ ಬಿಲ್ಡಿಂಗ್ ರಿಸೀಟ್ ಅಲ್ಲಿ ಬರಬೇಕು, ಓಕೆ. ಎಕ್ಸ್ಪೆನ್ಸಸ್ including payment for sports material. Will capital payments also come in receipts and payments account? Yes. Of course, yes. Payments of any nature will come in receipts and payments account. Capital or revenue, I don't care. So that is correct. Loss on sale of furniture. Loss on sale of furniture will come in P&L. That is income and expenditure account. Here what will come? The ultimate money received towards sale. How much have I received towards sale?
9,000.
If loss is 3,600 and cost is 9,000, the money that I would have received is 5,400. That should come in. See, where did it go down? ಅಯ್ಯೋ, ಎಷ್ಟೇ ಪ್ರಾಬ್ಲಮ್ ಅದು ನೋಡಿದ್ರ? See if it is there in the photo.
Answer 4.
Answer 4. Here. This one. So 5,400 should have come in receipt side, but the loss is appearing in payment side. Is it correct? No. Loss should have gone to income and expenditure. Receipt should have come in receipt side. Then balance carried down is also wrong because the other figures are wrong. Correct. Now we have to draft the correct receipts and payments account. Now understood that? Can we do it? Now yeah, the new receipts and payments account. Let's not write it down. We'll discuss here. Okay, again we'll take time. So first opening balance 9,000. That will be, of course, correct 9,000. Then actual subscription received. So 91,800 is the income. Oh, we have one more thing, 5,400. How much did we get here? Hey, one more thing we have done here.
That is the
Furniture sales.
loss.
Hey, that they have put in
Outside
hey, no,
subscription.
that is different.
Outstanding subscription.
Previous
Previous
year.
Adeli, there.
Previous year.
Adjustment.
1,800.
Subscription this year.
This advance we took. Here, subscription receivable of 5,400. This 5,400 will be considered in the income, which will go to IND. So what should I do?
We didn't receive.
That we did not receive. So what I have to do? Minus 5,400. So it is minus. So how much should ultimately come here?
90K.
We just did reverse working. Outstanding subscription we would have considered in income, but it has actually not received. That's why I subtracted. So actually received is 90,000. This should go to your receipts and payments. So here how much? We have ultimately got 90,000 rupees. So all of you understood this working? From 91,800 how we came to 90,000? Exactly ulta we have done. See, 91,800 is the income. Okay. Receivable as on 31,322. That means current year outstanding. Normally we would have added. Here we have subtracted. Ulta. From income we are going to receipt. So ulta. Normally we would have added. Here we have subtracted. Then advance for which year? Current year. Advance for current year we would have subtracted. Now we have added. Then receivable as on 31,321. The previous year receivable. That we would have subtracted. Here we have added. Then advance received as on previous year. We would have added, but here we have subtracted. Exactly ulta way. Because we are not going from income to receipt. Sorry, receipt to income. We are going income to receipt. Okay. Then other fees, 36,000 is actually correct. Then what else did we have? We had one more. The donation for building received is 18 lakh. How come this is not come? Here, donation for building 18 lakh. That is receipt. That will come. Then I told sale of building, the money received is 5,400. So sale of furniture, 5,400. Then expenses. What about expenses? Why have they subtracted? Included payment for, but that payment also should come here. They have bifurcated. That's all. From expenses they have removed and put it as sports material. Correct? No. When you purchase sports material, where will that come in expense? The entry will be sports material to bank, sports equipment to bank. So what they have done, it can come in receipts and payments, but they have bifurcated. That's all. Okay. Expenses alike is sports material. Then balance carried down will be calculated because everything is wrong. No? If you calculate everything and subtract, you get 18,14,400. So that is about your updated or corrected receipts and payments. Correct? So from here, can you do income and expenditure? Huh? Why are you laughing?
Sir, they haven't given full information.
Without giving full information, they expect us to do income and expenditure.
They asked.
They've asked here. So simple, man. From here only you can see what will come to income. In income side, subscription. So how much will come? 90,000 or 91,800? 91,800 will come in income side. Then other fees, nothing they have done. That is also income, 36,000. Then we have donation. Is this an income? No. This will directly go to balance sheet as building fund. How much? 18 lakhs. Then sale of furniture. Will 5,400 come in income and expenditure? No. Loss will come. How much was loss?
3,600.
So this loss would have come here. 3,600. Then what do we have? Then we have expenses. Expenses 72,000. Nothing about any outstanding, any information they have given. About expenses, nothing is there. So 72,000 will entirely come here. 72,000. Then 54. This will go to balance sheet. Have they told anything about depreciation? Nothing. Then they have told investment at 5%. Though we have not received any interest, should we book it on accrual basis? Yes. How much? 5,40,000 into 5%. I should book. So as money come, money we have not received. It is not bank to interest, but there is receivable. So interest receivable account debit to interest. How much? So that 27,000 would have come.
Sports material has decreased.
Then
Sports material.
Decrease.
sports material, if you see,
36.
they have given the closing stock. If they have given closing stock, means what we have to do? Every time, whenever sports material is there,
Plus,
they have told stock. That means you have to take sports materials. It is not sports equipment. It is sports material consumed. What was this? If I have paid 54,000 for sports material, that much I have paid to my supplier for purchase. But still unutilized is how much? 36. That means how much I have utilized, consumed. It should be 54 minus
18,000.
So 18,000 is only consumed. So to income and expenditure, what amount will come?
18,000.
Consumed amount, which is 54 minus
36.
36. We have opening balance also. Guys, we have opening also. How much is opening? Opening is opening is 1,33,000. Fourth one.
1,33,200.
Correct, no? So how much is sports material consumed? What is the formula? Opening stock plus purchases during the year minus closing stock is the sports materials consumed. How much is opening stock? 1,33,200 plus purchases is 54,000 minus closing stock is 36. So sports material consumed is,
151,31,000.
so they have taken that only, 151,
1.
200. So sports, whenever closing stock is given, you have to take that material or stock consumed and not the amount purchased. How will you calculate consumed? This is the formula. Standard formula. Opening stock plus purchases minus closing stock.
Closing stock on balance sheet.
The closing stock will again go to
Balance sheet.
balance sheet. And you are preparing. Done. Everything considered. So if you do everything, you'll get deficit of 72,000, which will be subtracted from the capital fund. So what else will come in balance sheet? As he said, sport material stock will come. Then
Investment.
donation for building will come in capital fund. What about opening capital? Opening capital we have to find out. No information about opening capital fund. What to do? They have given us opening balances. So do opening assets minus opening liabilities. You'll get a furniture 36, investment 5,40,000, material 1,33,200 minus opening liability. That is ending, no closing. Subscription is here we have that opening add how much? Outstanding of last received this year, so that will be an asset plus 3,600. Then prepaid of last year, that will be opening liability minus 1,800. Then anything of last year, how much did you get? 7 lakh 11. This furniture is sold now. That means in the opening balance sheet it will be there. So how much is the cost of that furniture that we sold?
9,000.
So if you add, how much it came? So your opening capital is 7,20,000. So you have to consider this also, because sold in current year, that means previous year it will be there in the balance sheet. Correct? So 7,20,000 is your capital fund minus deficit 72,000, building fund 18 lakh, subscription received in advance given in the question. Then furniture 36, opening is 36, but 9,000 we have sold. Then 5% investment given 5,40,000. Interest accrued 27. Guys, that interest we only booked now, which went to income. Have they given us cash towards that? No. We have to book a receivable, which will go to balance sheet as 27. Then we have sports material 36, outstanding subscription renewal 5,400 given in the question. Then cash in hand at bank, go to receipts and payments, closing, which is 18,14,400 rupees. We are done with your balance sheet also. Done now? There is one question which I want you to do, small one. You know that we'll have that intuition now. That intuition question. I think we have that in our book only. Incomplete records. So, this question, can all of you try this question? Ladies and gentlemen, this is there in our material only. I feel this is that one question. Somewhere this will come, either as part of your big problem or as a separate question. I feel this is something they'll test. So we'll cover this. This is the last question in NPO that we'll do. Next, we'll enter into partnership. Come on. Of course. There are certain questions which I feel will come. And these are the questions which will create confusion in the exam. Though it is very small question, but will create a lot of confusion in the exam. So only simple thing you have to calculate. The amount of subscription that will come and the amount of sports material consumed. The same, just now we did not like that one.
Sir, amount of subscription 3,80,000.
How did you do it? Same thing. Total received is 3,75,000. So you have outstanding subscription of previous year. So what will you do? You will subtract 11,250. And outstanding of current year, then advance of previous year, then advance of current year. How much is your subscription? Done. This is the subscription that will go to income and expenditure account. How much is sports material that will go to income and expenditure? So I have told income and expenditure what will go? Sports material consumed will go. Correct? So you have to focus on calculating sports material consumed. Done, huh?
So 60,000.
Huh?
Sports material consumed 60,000.
60,000. Thus,
Sir, amount due only I purchase extra sports.
no, creditors for sports material. Amount due towards purchase of sports material.
So it was 67, then I again purchased 30, so it became 90. That's why I need to pay more.
You again purchased what? 90.
When you credit card, it was 67. But then it became 97. So that means I purchased more from that.
See, you cannot conclude like that. You have to put a lecture. Because if you see, there is also payment made towards that due.
So 60,000 is purchases and 22,500
Is a consumption. Now we'll see. So always what will go? See, so small question. We have already done it. See, always consumption should go to income and expenditure. So how will you find out consumption? Opening stock plus purchases minus opening closing they have given. Purchases they have not given. But have they given us creditors for sports material? Yes. So put one creditors for sports material ledger. How much is the opening balance?
67,500.
It will come in credit side. How much is closing balance?
97,500.
How much have I paid during the year?
2,95,000.
That means this is what? This is whatever I've purchased during the year. That is how much? 60,000. So I got the purchases also. Correct? Now how much is opening stock? 75k plus purchases plus clothing stock. Hey, something is missing, bro. Hey, how come only 60? Here only we have 225. 2 lakh. 2,55,000 is the purchase. Okay. Minus closing stock is 1,12,500. So how much have I consumed? 2,17,500 is the sports material consumed that will go to income and expenditure. Clear? Very important. This can either come in one of your big questions or I feel it will come. Intuition.
How many marks is this?
Marks and either if they give it in small, it will be around for 5 marks. I feel they'll give it as part of the bigger question, like how we did the last one. There also same logic we applied, same exact thing.
But then you have to prepare everything.
Huh? Yeah, to do the whole. Here only this part. Then there is that one more question you remember. That is also small one, but very nice. Done, man. So we are done with what is this NBO. Now let's enter to extraction. So what you have to do is now till now whatever we have discussed, I want you to solve some more problems. Okay. Now what is the source for the problem? From where will you solve? Is the question. Okay. Now we have already solved 3-year RTP, which however we'll do it here. Now where we have to solve from? The remaining RTP and from MTP, and you know that there is something called as model test paper. You have 10 question papers there. Make sure to cover the questions from there. Okay, for all the subjects this applies. If you complete that MTP and RTP for like we have already done 3, remaining 3. If you complete all the questions from here, no, trust me, there is no possibility of you failing in the exam. Okay, if you cover all the questions, because 100% they will not give a new question. Okay, even if they give, in my experience, even if they give, they'll give it for maximum 10 to 15 marks. Still 85 marks will be in your hands. Even if they give something new, entirely they'll not make it. Correct? Yeah, it's common sense. ಹೊಸದು ಕೊಟ್ರೆ ಎಲ್ಲರೂ ಇಡೀ ಪೇಪರ್ ಹೊಸ ಕ್ವಶನ್ಸ್ ಕೊಡ್ತಾರ ಕೊಟ್ಟರು ಒಂದು ಕೊಡ್ಬೋದು worst case. Leave it. Remaining 85 will come from somewhere from this existing resources.
So MTP, most of them are repeated.
Then don't do it. Okay, whatever is there, different questions, cover it. RTP. Then if you still have time, go for previous year question paper. Okay, these 3 things. Keep solving. Now you know the concepts. Keep solving new questions. Whichever new adjustments you get, note it down. Okay, what I used to do during my preparations is that at any level, inter or CFA, once I used to complete the whole reading. I used to solve study, whatever is there in the material. Then what I used to do? Then I used to start taking questions from anywhere, yellaru sikki. First RTPs I used to solve, then MTPs I used to solve, then anywhere, then previous year question paper. Then some friend asked it out. Something I used to solve it, and anywhere if I used to get something new, that question I used to mark and keep it. If it is same thing, same logic, same application, same knowledge, I used to ignore it. If I used to get a new adjustment, I used to mark it at the somewhere. I used to keep it one side. One day before exam when we were going, or while we are preparing. Okay, I used to refer those adjustments and that's all. That helped me a lot. So you also take questions from wherever possible, place the adjustments, you mark it. You have to remember. If you think, I've understood the concept of it, so when the question comes in the exam, I know the concept, I will solve it under 100% I thought new doubts and all will come. Accounting ಗೆ ಇನ್ನೊಂದು ಡೈಮೆನ್ಷನ್ ಸಿಗಕ್ಕೆ ಸ್ಟಾರ್ಟ್ ಆಗುತ್ತೆ ಎಕ್ಸಾಮ್ ಒಳಗೆ. ಕರೆಕ್ಟ್ ಅಲ್ವಾ? ಇದಂಗೆ ಇದು ಸೀರಿಯಸ್ಲಿ. ಸೊ ಡೋಂಟ್ so seriously don't trust your concepts. Ours is a fading memory. So how to crack this exam? By revising it multiple times. That's all. That is all the key, man. If you finish revising 3 times now, even God cannot stop you from passing this exam. Seriously. The thing is, students will not be able to complete it for 3 times. Because the syllabus is vast. That is the problem. But if you somehow, by working for more hours or something, if you complete it for 3 now, trust me, even God cannot stop you. This is what I'm telling you, seriously. But the thing is, God can stop you from revising. That is the problem, okay? But if you finish now, then later even God cannot stop you. Okay? So let's... Okay, break. No one is going out and all, okay? 10 minutes break here. Okay. If you want, we'll have some activity and all. Let's play. What to play? Hey, okay, we have a game which we used to play. I think new people don't know. That journal entry game we used to play. Hey, okay. Hey, no, it's fun. Okay, we'll play that. Now the whole class will be divided into 4 teams. Okay, team. Okay. Last row, 1 team. Okay. This is the 3 team. Okay. 1, 2, 3, 4. 1 team. Okay. You 1, 2, 3, 4. 1 team. This row 1 team and the behind row 1 team. 4 teams ಆಯ್ತಾ? 8 team ಆಗೋಯ್ತಾ ಅಂತ? ಇಲ್ಲ 4. 1, 2, 3, 4. 4 teams. Okay. Now the game is very simple. That team is asset. This team is expense. Okay. This team is income and that team is liability. Aita? Asset, expense. Asset, expense, income, liability. 4 team. Now what I'll do is, I will ask for I'll tell a transaction. Okay. In the transaction you have to analyze. And in the transaction if asset is increasing, asset people should stand. If asset is decreasing, asset people should bend.
Sir, we planned
Hands up, okay. If it is increasing, hands up. If it is decreasing, bend up. Now, if it is nil, sit like that. Okay. Understood. Same thing for expense, income, liability. The transaction, if they are increasing, decreasing, up or down, you have to do. Okay. And you know, for every journal entry, there is dual aspect. Okay. And the other teams can deceive the other team. Okay. If someone stands, say suppose I say a correct journal entry and the team stands, the other team can deceive. Hey, bro. And our deception in victory, that point gets it, and they gets a point. Okay. And if you still stand, then you will get a point, in spite of deception. Okay. Clear? Now, just for your testing, credit sales happened. Hey, correct ಆಗಿತ್ತು ಕಾಣಿಸ್ಬೇಕು ನನಗೆ. ಏನು ಡ್ಯೂಯಲ್ ಆಸ್ಪೆಕ್ಟ್ ಬರೀ ಒಂದೇ ಟೀಮ್ ಕೈ ಐತಿ. ಈಗ ಯಾರು ಅದರ್ಸ್ ಡಿಸೆಪ್ಷನ್ ಏನಾದ್ರು ಏನ್ ಅನ್ಸುತ್ತೆ? ಅವ್ರು ಮಾಡ್ತಾ ಇರೋದೆಲ್ಲ ಕರೆಕ್ಟ್ ಅನ್ಸ್ತಾ ಇದೆಯಾ ಇಲ್ವಾ? ಮತ್ತೇನ್ ಸರಿ ಅನ್ಸುತ್ತೆ ಹೇಳಿ.
So stock ಕಮ್ಮಿ ಆಗಲ್ವಾ?
ನೀವು ಕಣ ನನಗೆ ಏನಪ್ಪ ಯಾಕೆ ಮತ್ತೆ ಏನು ಆಕ್ಷೇಪ ರಿಸೆಪ್ಷನ್ ನಾನೇ ಮಾಡ್ಬೇಕು. ನನ್ಗೆ ಒಂದ್ ಅರ್ಥ ಆಗ್ತಿಲ್ಲ ಯಾಕೆ ಲೈಬಿಲಿಟಿ ಅವ್ರ ಕೈ ಎತ್ತಿದ್ದಾರೆ ಅಂತ. ಯಾಕೆ ಲೈಬಿಲಿಟಿ ಅವ್ರ ಕೈ ಎತ್ತಿದ್ದಾರೆ? ನಾನು ಏನಂದಿದ್ದು? ಕ್ರೆಡಿಟ್ ಸೇಲ್ ಏನಪ್ಪ ಎಂಟ್ರಿ? ಕ್ರೆಡಿಟ್ ಸೇಲ್ ಎಂಟ್ರಿ accounts ne ulta palta. What is happening in sale? Income increasing, debtors, asset is increasing. Debtors to sales, liability na kappa kaide. So yaar kay isbekagide hangare? Asset? In obne kay idanga one team one respect. ಬೇಗ ಟೈಮ್ ಹೋಗ್ತಾ ಇದೆ ಅಷ್ಟೇನಾ? ಬೇರೆ ಎಕ್ಸ್ಪೆನ್ಸ್ ಅವ್ರದ್ದು ಫೋನ್ ನೋಡ್ಕೊಂಡು ಕೂತಿಯಾರಪ್ಪ.
ಗೂಗಲ್ ಮಾಡ್ತೇವೆ.
ನೀವ್ ಬರಲ್ವಾ ಇಲ್ಲಿ?
ಕನ್ಫರ್ಮ್ ಸರ್.
So it is correct only anyways. So income sales increasing, debtors asset increasing, so it is correct. Purchase of equipment is considered as expense. Purchase of equipment is considered as expense. Now this is an error. I want rectification in the answer. So equipment is considered as expense. Decreasing the dent. ಅವರು even asset ಏನಪ್ಪ equipment equipment fixed assets type. Others deception or something. Why are you been? Why are you?
Purchase of an expense. So now for the rectification of it, it will be double entry. That no, not double. You have to decrease the expense and increase the asset.
So you are what?
Expense.
Then
Decrease.
why? Sure, huh?
Yeah, sure.
Log the answer.
Yes.
And then one more. Why da? Why not? The purchases is increasing, no? So it's correct. Done. Correct. Okay. Then another cycle bills discounted dishonored. Bills discounted with bank dishonored. ನೀವು ಫ್ರಂಟ್ ರೋ ಯಾರು ನಿಂತ ಇಲ್ವಲ್ಲ ಇದು ಹೆಂಗೆ ಇದು
So no effect.
Why?
Because bank will decrease and the bills debtors will increase. Asset will decrease and increase. So no.
So it's correct. Correct. 1 point to that thing. Bill endorsed this one. ಒಬ್ರು ಮಾತ್ರ ಕೈ ಎತ್ತಿದ್ದಾರೆ ಇನ್ನೊಬ್ರು ಎಕ್ಸ್ಪೆನ್ಸ್ ಯಾಕೆ ಸುಮ್ಕುದಿ ಮಾಡಿ ಮಾಡಿ ಹಿಂದೇನಿಲ್ಲ Oh, you have liability, yeah. Others, then lock. What is the dishonor entry? Data. So it's correct. And then what else? Yeah, the other queen is that nice man. ಹಂಗಾರೆ ಅದೊಂದು ಸೈಕ್ ಆಗಿರೋದೇ ಕೊಡ್ಬೇಕು. Okay. Purchase return entered in sales returns book, but creditors account is posted correct. ಅದಕ್ಕೆ ಇವಾಗ ಮಾಡಿಸ್ತಾರೆ. Purchase return entered in sales returns book, but creditors is posted correct. With respect to suspense account, if it is debited, asset people should raise. If it is credited, liability people should raise. ಬೇರೆ ಐಟಮ್ಸ್ ಇರುತ್ತೆ ಕಣ್ಣ. Okay.
Suspense debit to purchase returns to
Sales return, purchase return, what is the effect that you do? It's a nominal account. So purchase return ಆಗ್ತಿದೆ ಅಂದ್ರೆ expense is decreasing. Sales return ಆಗ್ತಿದೆ ಅಂದ್ರೆ income is decreasing. Correct? That's how you consider. If purchase return is increasing, then what is happening to expense? Decreasing. If sales return is increasing, what is happening to income? Decreasing. So you have to act accordingly. ಆಯ್ತಾ? Purchase return as a purchase return as the effect of what? ಆಯ್ತು ಹಂಗೆ ಮಾಡಿ ನೀವೇನ್ ಬೇಕು ಮಾಡಿ See, I am telling you how to consider. If in your entry purchase return is increasing, that means what? Expense is decreasing. So what you have to tell? Expense is decreasing, and the expense team should act for it. If sales return is increasing, that means sales is decreasing. So income team should act for it.
Expense will have still effect.
Nevo, okay. Others? Nevo, asset expense, income. Income decreasing. Okay. Inandu? ಅಲ್ಲ ಇನ್ನು ಇಷ್ಟೇನಾ ನೀವೇನು ಮಾಡ್ತಲ್ಲ ಇಷ್ಟೇನಾ ಎಂಟ್ರಿ ಕರೆಕ್ಟ್ ಆಗಿ ಎಂಟ್ರಿ ರಾಂಗ್ ಇದ್ದು ಎಕ್ಸ್ಪೆನ್ಸ್ ಅವ್ರು ಬಗ್ಬೇಕು ನಾವ್ ಹೇಳಿದ ತಕ್ಷಣ ಬಗ್ತೀರಾ ಕ್ವಶನ್ ಮಾಡ್ಬೇಕು ಕ್ವಶನ್ ಮಾಡಿ ಕರೆಕ್ಟ್ ಆಗಿದೆ ಅಂತ ಹೇಳ್ಬೇಕು ಕರೆಕ್ಟಾ ಏನಕ್ಕೆ ಬಗ್ತಾ ಇದೀನಿ ಏನ್ ಎಂಟ್ರಿ ಏನ್ ರೆಕ್ಟಿಫಿಕೇಶನ್ Purchase return entered in sales return book, but creditors is posted correctly.
So entry is suspense account debit to purchase return account to sales return. Suspense debited, asset people reached. So correct. Then sales return. Sales return is crediting means it is what is happening? Say to sales return. Sales return decreasing antandre income is decreasing. So they were bending. So correct. Then purchase return is getting credited antandre what? It means purchase return is increasing. Purchase return increasing means purchase is decreasing. Expense is decreasing. That means you are supposed to bend down. Okay. Gone. 1 point gone to this question. Huh? Negative.
ಇಲ್ಲ ಫಸ್ಟ್ ಒಂದು ಒಂದಿತ್ತಲ್ಲ ಸರ್
Hey, that was Grace da. Data entry. Expense ಏನು ಕೇಳಿದ್ದೆ ನೀವು?
Stock.
Yeah, that was debtors to sales.
you asked purchase of equipment was
There. Subhash.
ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕಡಿಮೆ ಆದಾಗ ಇನ್ಕಮ್ ಜಾಸ್ತಿ ಆಗುತ್ತೆ.
Correct. ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕಡಿಮೆ, ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕ್ರೆಡಿಟ್ ಆಗ್ತಿದೆ ತಾನೆ. ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕ್ರೆಡಿಟ್ ಆಗ್ತಿದೆ ಅಂದ್ರೆ ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕಡಿಮೆ ಆಗ್ತಿದೆ. ಸೊ ಇನ್ಕಮ್
ಜಾಸ್ತಿ ಆಗುತ್ತೆ.
ಏನಪ್ಪ ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಡೆಬಿಟ್ ಆತ ಕ್ರೆಡಿಟ್ ಆತ ಡೆಬಿಟ್ ಆಗುತ್ತೆ. ಸೊ ಹಂಗಾಗಿ ಕ್ರೆಡಿಟ್ ಅಂದ್ರೆ ಕರೆಕ್ಟ್, ಇನ್ಕಮ್ ಜಾಸ್ತಿ ಆಗ್ಬೇಕಿತ್ತು.
Purchase is considered as purchase return is considered as an income. And the sales return is considered as an expense. So ಉಲ್ಟಾ ಮಾಡಿದ್ರೆ ಅದಕ್ಕೆ ನಮ್ಮ ಪ್ರಕಾರ ನಾವು
ನಾನು 2 ಸಲ ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡ್ಬೇಕು ಅದನ್ನ.
ಸರ್ ಇಲ್ಲ
ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕ್ರೆಡಿಟ್ ಆಗ್ತಾ ಇದೆ ಅಂತಂದ್ರೆ ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕಡಿಮೆ ಆಗ್ತಾ ಇದೆ ಅಂತ ಅರ್ಥ. ಅಂದ್ರೆ ಸೇಲ್ಸ್ ಜಾಸ್ತಿ ಆಗ್ತಾ ಇದೆ ಅಂತ. ಕರೆಕ್ಟ್. ಸೊ ಇನ್ಕಮ್ ಶುಡ್ ಹ್ಯಾವ್ ಸ್ಟುಡ್ ಕರೆಕ್ಟ್. ಅವ್ರಿಗೆ ಅದಕ್ಕೆ ಡಿಸ್ಪ್ಯೂಟ್
ನೀವು ಸೇಲ್ಸ್ ಇಂದ ನೀವು ಕಳಿಸಿದ ಸೇಲ್ಸ್ ಇಂದ ರಿಟರ್ನ್
ಡಿಸೆಪ್ಷನ್.
ಸರ್ ಇಲ್ಲ ಒಂದು ನಿಮಿಷ ಸೇಲ್ಸ್ ವಾಪಸ್ ಬಂತು ನಮಗೆ ಸೇಲ್ಸ್ ಇನ್ಕ್ರೀಸ್ ಆಗುತ್ತೆ ಅಂತಿದ್ರೆ
ನೋಡಿ ಸಿಂಪಲ್. ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಇನ್ಕ್ರೀಸ್ ಆಗೋದ್ರೆ ನಾವು ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಡೆಬಿಟ್ ಮಾಡ್ತೀವೋ ಕ್ರೆಡಿಟ್ ಮಾಡ್ತೀವೋ? ಇನ್ಕ್ರೀಸಿಂಗ್ ಗೆ ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಡೆಬಿಟ್ ಮಾಡ್ತೀವಿ. ನಾವೇನ್ ಮಾಡಿದೀವಿ ಅಂದ್ರೆ ಸೇಲ್ಸ್ ರಿಟರ್ನ್ ಕಡಿಮೆ ಆಗ್ತಾ ಇದೆ ಅಂದ್ರೆ ಸೇಲ್ಸ್ ಜಾಸ್ತಿ ಆಗ್ತಾ ಇದೆ. ಸೊ ಇನ್ಕಮ್ ಇನ್ಕ್ರೀಸಿಂಗ್. when sales return decreases sales increases. Simple. So asset team one. Okay.
Everyone maintain negatives.
So done. Okay. Now we'll continue with our revision. Okay. So next we'll enter into partnership accounts. Okay. So So introduction. What is partnership firm? Partnership firm, it's a way to start the, ಬಿಟ್ಬಿಡದ
ಅದೆಲ್ಲ ಡೆಫಿನೇಷನ್ ಅದೆಲ್ಲ
ಮತ್ತೆ ಎಲ್ಲಿಗೆ ಬರೋದು?
ಅದರಲ್ಲಿ ಸಮ್ ಹೋಗಿ ಸರ್
ಡೈರೆಕ್ಟ್ ಆಗಿ ಸಮ್ಗೆ ಹೋಗ್ಬಿಡೋಣ.
ಬೇಡ
ಎಲ್ಲರ ಸಮ್ಮತಿ ಇದ್ರೆ ಪರವಾಗಿಲ್ಲ, ನೆಮ್ಮದಿ ಕೆಲಸ. ಆಯ್ತು, ಅವ್ರು ಹೇಳೋದ್ರಲ್ಲಿ ಇಂಟ್ರೊಡಕ್ಷನ್ ಇಂದ ಹೋಗೋದನ್ನು ಸ್ವಲ್ಪ
ಡೆಫಿನೇಷನ್ ಎಲ್ಲ ಬೇಡ.
ಮೇನ್ admission. Direct matter. Now you know what is partnership and stuff, alva. So directly we'll start with admission part. Now there are already existing 3 partners. One more partner will come. Okay, that is called admission. Then what can happen? Retirement can happen. From existing partners, one guy is leaving the partnership. That's retirement. If one partner is dying, it is death. Admission, retirement, and death. Or sometimes you are running a partnership firm and there will be change in profit sharing ratio among. So all these are considered as what? Reconstitution of the partnership. So what all is included in reconstitution? Admission, retirement, death, and change in profit sharing ratio. So whenever this reconstitution is happening, these 4 things. So what will we do? What is the accounting part? First thing we open is revaluation account. What do we do in revaluation account? Because as per accounts, what do? We maintain all the assets at historical cost. But when a partner is leaving, coming, or whatever reconstitution is happening, the value of the asset would have gone up. Say, suppose land, when I bought it was 1 lakh, now it will be 1 crore. Now, who is responsible for this increase? All the partners who are still there. Is the new partner responsible? No. So, is it fair for him to give a share? Now, if I directly make him a partner without revaluation, then later this guy will also get a share in the profit that is earned by the assets, which is correct. Wrong. So, what will we do? We prepare revaluation, and all the increase in assets will come in the credit side, all the increase in liabilities will come in debit side, decrease in liabilities will come in credit side, then decrease in assets will come in debit side. Right? Because increase in assets or decrease in liability is in the nature of income. Right? Ulta will come in debit side. So all the revaluation you will do, and whatever revaluation profit you have, right, that will be divided among the old partners, the existing partners. When we are doing revaluation, whoever will be the partners, to the old partners, we will divide it in PSR ratio. Correct? We prepared revaluation. Say suppose there is one unrecorded asset. What to do? Where will it come? Debit side or credit side? Unrecorded asset. That means this asset you have not recorded. Today you have it. It will come in credit side because it is as good as increase in asset. No. Similarly, unrecorded liability will come in debit side. So we prepared revaluation account. Then profit from revaluation account will be transferred to partners' capital in their PSR. Then what will we do? Whenever this admission reconstitution, whatever reconstitution is happening, second step is goodwill. Now before we go to goodwill, second step is you have to look for reserve. What is reserve? Reserve is the accumulated profits till date. Who is responsible for this accumulated profits? The old parts. So whatever reserves, if it is appearing in the balance sheet, divide it among the existing partners or old partners in their old profit sharing ratio. Clear? Second step, reserves is done. Third, whenever reconstitution is there, goodwill will come into the picture. So you have to value the goodwill, and to whoever partner is coming, going, whatever is happening. See, reconstitution, you have to do valuation of goodwill. Sir, how to give goodwill? Who should give? What should give? There is a problem here. See, guys, no matter what is the situation, admission, no death or retirement. Now, if I ask case by case, in case of admission, what will happen? New partner will give goodwill to old partners because existing partners are given to him. Goodwill is earned by whom? Existing partners. In that goodwill, they are giving a share to new partners. So new guys should give money for old partners. In retirement, ulta. For retiring partners, the existing partners should give goodwill. In death, same. Because death is as good as retirement. Only thing is it is retirement from the world. So death and retirement, same thing. Okay. Now we'll value the goodwill. And generally, what I will do is, my method of doing that goodwill part is, I don't see admission or retirement or death. I will not do it. I'll see how much is the valuation of goodwill. Okay. In questions, most of the questions, they'll only give the goodwill valuation. Or else sometimes we have to calculate. To calculate, we have different methods. We have one average profit method. So under average profit method, how will you find out goodwill? They would have given you previous year profits. Okay. In average, you have two methods: simple average and weighted average. In simple average, how will you do? They would have given you the profits of previous years. Take all the profits divided by number of years. You got simple average. Weighted average, you take the same profits. To that profits, in that order only, assign weights. 1, 2, 3, 4. Okay.
In simple profit also you have to do number of years purchase.
I'll come there. So two methods were there. What is it? Average profit. Two things you can do: simple and weighted. Okay. Simple, how will you do? They would have given profits of 4 years. Say suppose 19, 20, 21. Take the profits of all the 4 years, divided by number of years, which is 4. You will get the average profit. And in the question, they would have given you number of years of purchase. Why? What is the number of years of purchase? For the years, for how many years can you keep this profit maintainable? That much is my goodwill. If I can earn super profit of 50,000 for 3 years, then my goodwill is how much? 1,50,000. That's why we'll multiply it by number of years of purchase. This is generally given in the question. So whatever average you get, multiply it by number of years of purchase. How will you do weighted average? Say suppose they have given you 4 years profit. Okay. To this profits, whatever they have given, assign weights. In this order only. 1, 2, 3, 4. Say profits is 10k, 20k, 30k. Okay, assign weights. Why are we assigning? Why are we giving higher weights to the later profits and lower weights to the earlier profits? Guys, consider any business. Okay. In the initial, they will earn low. Can I consider that for goodwill valuation? No. Actual capacity is unleashed or unveiled when? In the later profit. So that's why while calculating goodwill, we are giving weights to the later profits. So you'll assign weights, then you will multiply 10k, 40k, 90k, and 160k. So you'll add everything. How much you'll get? 250. You'll get 3 lakh, and you'll divide it by number of weight. That is. So your weighted average is A. You have to take number of weights. You did by 4. So divided by number of weights, it is 30k. And if they have given number of years of purchase in the question, multiply that. Say suppose it is 4. Then your goodwill is 100. This is how you will find out goodwill as per average profit. Second method is super profit. How will you find out super profit? Super profit is equal to actual profit minus normal. Actual profit they would have given in the question. Actual profit actually earned. Normal profit is how much is the same business in the industry. There will be similar businesses. No, my exact business in the industry. How much is it earning? That is called normal profit. Andre nande business ಮಾಡ್ತಿರೋ ನಂದೇ capital ಇರೋದು exactly my situation. But another business in the same industry. How much it is earning? That is called normal profit. Okay. In the question, do you think they would have given normal profit? No, but they would have given normal rate of return. Okay. So from normal rate of return, you can find out normal profit. How do you find out normal profit? Capital employed into NRR, normal rate of return. Say suppose in my business, how much capital have I employed? 10 lakh rupees. And the industry is earning 10%. So normally if you invest 10 lakh, industry will give you only 10%, which is 1 lakh. But you are earning 3 lakhs, say suppose. That means your super profit is 2 lakh. My same people in the industry who have invested 10 lakh, they are earning only 10%, which is 1 lakh. But I am earning 3 lakh. My super profit is 2 lakhs. You found out the super profit into number of years, say 3. So total is 6 lakh is the goodwill. That is super profit method. Third, which is third method? Third method is capitalization method. Here, how will you find out? Capital employed minus. It is not that. It is what? What is the formula? Minus capital employed. See how this method goes. Is, say suppose the actual capital employed by you is 10 lakh rupees. Okay, the person who is running the business. Okay, then what you do is your profit for 10 lakh, the profit you are earning is 1,50,000 rupees. Okay, your actual profit is 1,50,000. Your capital employed is 10 lakh. Then what you'll do is to earn the same profit, how much should other people invest outside is what you have to find out. How much we are getting in the industry? We are getting only 10%. So if I want to get 1,50,000 rupees in the industry, how much I have to invest?
15 lakhs.
See, I have to invest 15 lakhs in the industry to get the same income, but I am getting the same income at the investment of 10 lakhs. So how much is my goodwill? Others need 15 lakhs, but I need only 10 lakhs. So my goodwill is 5 lakhs. This is capitalization method. Clear? They'll give you the actual profit earned. They'll give you actual capital invested by you. They'll give that. They'll give you NRR also.
Sir, you done
Ulta?
for super profit, you wrote capitalization.
Actual profit minus normal profit only. Okay.
Yes, sir.
This is only the formula.
But this is normal capital minus capital.
This is normal capital minus actual capital. ಆಯ್ತಾ ನಾರ್ಮಲ್ ಕ್ಯಾಪಿಟಲ್ ಅಂದ್ರೆ how much the other people has to invest to earn my profit. My profit is how much? 1,50,000. To earn 1,50,000 at 10% rate of return, which is given by the industry, I have to invest 15 lakh. That is normal capital, but my actual capital is 10 lakh. So my goodwill is 5 lakhs. That's all. This is capitalization method. Okay, here no number of years of purchase and all. That is only for super profit and average profit method. So this is the various way how you can find out goodwill. Now once you find out goodwill, my way of doing apportionment is very simple. I don't see admission, retirement, death, nothing else. I'll simply calculate sacrifice gain ratio. I'll not see what is happening there. I'll only calculate sacrifice gain ratio. Okay. How to calculate sacrifice ratio? Okay. SR is equal to old ratio minus new ratio. If you get this figure in positive, then that means it is sacrifice ratio. If you get this figure in negative, that means it is gain ratio. If you get it in positive, it is sacrifice. I don't see whether it is admission, retirement or anything. I'll just do this. Then I'll take the goodwill. Okay. I'll take the goodwill. If it is sacrificing, then I'll divide it in. If it is admission, or if it is in retirement, that's two different cases. In admission or change in PSR, whatever it is, I'll divide this goodwill in sacrifice ratio among old partners. Guys, what is the logic in case of goodwill is always sacrificing partners should give goodwill to gaining partners. Matter step. Be it admission, retirement, change in PSR, death, anything. Who should give goodwill to whom? Gaining partner should give goodwill to sacrificing partner. So, what will be our goodwill adjustment entry in case of anything? Always, sacrificing partner should get goodwill from gaining partner. Again, gaining partners are gaining share. So, they are the ones who should give goodwill. So, what will be the entry? Who is giving? Gaining partners are giving goodwill. So, their capital balance should decrease. So, gaining partners capital account cap to sacrificing partners capital credit. This is the case anywhere. So I not see admission to and directly calculate sacrifice ratio. Okay, I'll see who is sacrifice, who is gain. Gain people will give to sacrifice. This is the entry we will pass. In any case, admission, retirement, change in PSR, death. Any case, this is the rules to be followed. Clear? Okay. Now, gaining people should give to sacrifice. Say suppose two partners are sacrificed. Then among that two partners, how will we divide? In the sacrifice ratio. If sacrifice, say suppose, we'll take it case wise. Admission. In admission, what is happening? There are already three partners. One more partner is coming in. Okay. That guy will give the goodwill. That goodwill will be shared among existing partners in which ratio? Sacrifice, because existing partners sacrifice that share for new partner, so they will get goodwill in sacrifice ratio. Then in retirement guy, one guy is leaving, the existing partners are giving goodwill to him, to the leaving partner. That will be incurred among these two partners in which ratio? In gain. Why? Because they gained that guy's share, so it will be shared in gain ratio. Okay, simple.
So if they mention equally, no need of these.
Equally means you're sharing it in equally. No? Okay. Now let's talk about the assumptions with respect to ratios. Okay. Say suppose we are calculating sacrifice ratio. What is the default formula to calculate sacrifice ratio? New ratio. If they have given, always do this one. Old minus new. Suppose in the question they have not given you the new ratio. Then what will you do? You assume the old ratio only to be sacrifice ratio. The assumption is old ratio is only sacrifice ratio. Any doubts here? Then you are calculating gain ratio. Gain ratio calculating. Formula is? If they have given, please calculate it like this only. Say suppose they have not given you the new ratio. Say suppose there are three partners A, B and C. Their profit sharing ratio is 3:2:1. Then C left. Okay, remaining partner is AB. If they have given their share as 3:2, new profit sharing ratio is 3:2. How will you calculate gain ratio? You will do old minus new or new minus old. You will do. Say suppose they have not given this 3:2. Then what will you assume? What is old ratio? Because there are only two partners now. You have to see the corresponding share. Who are the remaining partners? So this is the new ratio. That's what you can easily find out. Okay, when finding sacrifice ratio, if they have given, use it. If they have not given new ratio, then what will you assume sacrifice ratio as? Here you are assuming sacrifice ratio as old ratio. From that you will find out new ratio. While calculating gain ratio, if they have given new minus old, good enough. Or else what you are assuming to be the new ratio? The respective share, which is 3:2. From this you can find out gain ratio. Clear? If you know these two, if our engage twisted that you can solve it. In the first case, assume SR to be OR only if nothing is given. In the second case, assume the new ratio to be the respective share. Clear? When something like that happens, I'll suddenly get blank. I don't know why. So goodwill division is done. Everything is done. Then where were we? Reserve fee distributed. Goodwill is done. Then that's all. Then in case of admission, what will happen? That guy will bring his share of cash along with goodwill. Now my question. Now sometimes goodwill is not given in the question, but you have to find out. It will be hidden. How? Say suppose, let's take the example of admission only. A's capital share is 10 lakh. B's capital share is 10 lakh. And C, A, B are the existing partners. Now we are admitting C. C we are admitting for 1/3 share. We are giving him 1/3 share for C. And we are collecting 20 lakh rupees from him. That guy is bringing how much as capital? 20 lakh rupees. Okay. For 1/3 share. This is the information they are given. A, B were the existing partners. Their existing capital is 10. C is being, their old ratio was 1:1. Okay. Now how to find the hidden goodwill? Now what we have to do is find out the total net assets of the firm now. Have they given assets minus liabilities to find out the net assets? No. What is one more way to find the net assets? Assets minus liabilities is equal to capital. So do we have capital information? Yes. So what is the total capital of the firm? A 10, B 10, C 20. So total capital is 40 lakh rupees. This is the worth of the firm. Now let's see how much was C ready to pay. C has paid 1/3 for 1/3 share is ready to pay 20 lakhs under. For the full firm, how much you would have paid? This is only for 1/3. For 1/3 is ready to pay 20. That means for the full firm is ready to pay. So how will you do this? 20 into 3/1. So for full firm, C's valuation is 60 lakhs, but our net worth of the firm is only 40 lakhs. That means he has given the valuation of 20 lakh more. So what is this? Why 20 lakh more? So your goodwill is 20 lakh rupees. This is called as hidden goodwill. So how did you find out hidden goodwill? First take the total capital of the firm. A, B plus C. 40 lakh. That is the net worth of the firm. What is C's valuation? For 1/3 is ready to give 20 lakhs. That means for full firm is ready to give 60 lakhs. For full firm is ready to pay 60 lakhs. But actual net worth of the firm is 40. So it's ready to pay 20 more. Why? Goodwill. Correct. So that is the what C. What is this? Capital. Capital is nothing but asset minus net worth of the firm. How much is capital? 40 lakh rupees of the whole firm. C, while admitting, how much is he paying as capital? 20 lakh rupees for 1/3 share. 1/3 share there. That is 3.33% of the total firm is ready to pay 20 lakh. And the 100% is ready to pay how much? That is 60 lakh. So for the same firm is ready to give 60 lakhs, but my net worth of the firm is only 40. For something which is worth 40, why are you giving 60? Why are you ready to give that valuation? That 20 extra is ready to give because of goodwill. That is your hidden. All of you understood? Done? So that is about your so goodwill adjustment done. Then in case of admission, that guy bought the capital and goodwill. That's it. In case of retirement, what will happen? Whatever dues he has, we have to give it to him back while leaving. So what all will we give to the retiring partner? His capital balance, his reserve balance, his share of goodwill will give. Then his share of revaluation profit will give it off. Then whatever his profit is earned till that date, will give it off. Then if you have JLP or SLP, ಇದೊಂದು math ಇದೆಯಲ್ಲ. JLP or SLP, the share in the JLP SLP we will give. Okay, we'll come to the JLP SLP part tomorrow. Okay. ಇವತ್ತಾದ್ರೂ ಸ್ವಲ್ಪ ಜಾಸ್ತಿ ಆಗೋಣ. ಇವತ್ತು ಆರಾಮಾಗಿ ಅಡ್ಮಿಷನ್ ರಿಟೈರ್ಮೆಂಟ್ ಅಡ್ಮಿಷನ್ ಡೆತ್ ಆಲ್ ದಟ್ ವಿಲ್ ಡು. JLP accounting and the JLP stuff we'll discuss tomorrow. Okay. Again, RTP September 25. Jan 25 was nice.
So they asked to match their capital balances as per the ratio.
That is one type of question. We'll see if we have that kind of. You want me to do that question, guys?
Yes.
Is that a little crazy?
Yes.
You remember in partnership questions, ultimately they say match the capital in the proportion of the TSR. We'll do that question on there. Good. Then I don't know if it is there in RTP. We'll go to our in our NTP. Which NTP?
3.
ಅದೇ ಮಾಡ್ಬಿಡೋಣ. Is it admission?
Yesterday I tried to solve it.
MTP 3. Where da?
So 4 sir.
Fourth. It is realization.
Sir, model MTP 4.
For MTP, this is
5.
5. It is there in 4.
3 sir.
3. Yeah. Admission. Therefore, the capital account will be adjusted to current accounts of partners in such a manner that all the partners would be their profit sharing ratio. Okay. Okay, guys. There is one admission question here. We'll see. Page number is 26. Here it is 21. 21.
Zoom out.
So this is a question on admission of a partner. So admission is simple. In admission, what do we prepare? What are the things to do? First, prepare revaluation account. Second, if you have reserves, distribute it in old ratio. Then goodwill adjustment we have to do and finish it. That's okay. Now let's read. The balance sheet of partnership firm Mrs. Alpha and Associates consisted of 2 partners X and Y who are sharing profits and loss in the ratio 5:3. That means 5:3 is the old ratio. The position as on 31/3/24 was as follows: X capital, Y capital. They have P&L account. Is this reserve? Hello. Is this P&L account a reserve? Here. Guys, it is a reserve. So reserve, what will you do? Share it among the old partners in old ratio. Then trade creditors, all this they have given. Okay. On the above date, Z was admitted as a partner on the following terms. So Z should get 1/5 of the share of profit. So they have given 1/5 share to him. So whenever they have given this, okay, have they given about the new ratio? See here, they have not given the new ratio. They have just given the share of Z. So how will you calculate sacrifice ratio? See, only if they give new ratio, we can find out the sacrifice ratio properly. Here, have they given the new ratio? No. So your assumption will be. So your sacrifice ratio is old ratio. Okay, done. Z bought 2,40,000 as his capital and 32,000 for his share of goodwill. So goodwill they have only computed and told us how much should new guy bring? 32,000. So total money bought by him is 2,72,000, out of which capital is 2,40,000. Plant and machinery would be depreciated by 15%. Land and buildings would be appreciated by 40%. Why have they given all this nonsense?
For
For
revaluation.
revaluation. Correct. So plant and machinery would be depreciated. So which side?
Debit.
Will come in the debit side, credit decreasing. Land and building appreciated. Will come in the credit side. PDD to be created at 5%.
Debit.
So which side will it come? So PDD has the nature of liability. So increasing liability, debit side. Then an unrecorded liability of 6,000 for repairs to building would be recorded in the books of account. So where will unrecorded liability will come in? Debit side. Immediately after that admission, goodwill bought by him would be adjusted among old partners. Okay, that means we'll pass that goodwill adjustment entry. Why do we pass goodwill adjustment entry like that? That is gaining to sacrificing, because goodwill cannot come in books of accounts. It cannot, self-generated goodwill cannot be recorded in books of accounts. That's why we'll do it through partners capital account adjustment. What is that goodwill adjustment entry? Gaining account, gaining partners account debit to sacrificing partner. This is the entry in all the cases. Now, then what happened? Thereafter, the capital account of the old partners would be adjusted to the current accounts of the partners in such a manner that the capital accounts of all the partners would be in their profit sharing ratio. So what they are telling is, when we do all the adjustments for the purpose of admission, each of them will get different capital balances. And we are following which capital method? Fixed capital method or fluctuating capital? We are following fixed. In fixed, we keep the main capital account intact and all the adjustments is done in current account. Okay. Now what they are telling is this fixed capital account is there. They want that to, the capital balances, they want that to match with or to be in proportion with profit sharing ratio. That will do it in the last. Till then.
So we have to prepare two separate accounts.
Yeah. Because they are following
So
fixed.
they have done only one.
Then why current accounts they have told?
So they have taken as a liability and an asset separately, like shown in the solution.
See, the question they have asked us revaluation. In the question they have asked us only capital, but they are maintaining capital in fixed method only.
So, but all the adjustments they have taken into capital account.
In capital account, yeah. This thing also, goodwill and everything.
Yes.
Goodwill should come. Reserve apportionment.
Yes, sir.
Everything in capital.
Everything in.
Capital account. So the balances they have written as current account and shown in the balance sheet also.
Because they have used current account, it should come somewhere. So they have given the adjustment in capitals.
Yes.
Wait, we'll see here.
So in 526 page.
No, we'll see. Answer Allah. Something will be there here then. See guys, because of the D point that has happened. See the D point. Immediately after that admission, goodwill bought by him would be adjusted among old partners. Thereafter, the capital accounts of the old partners would be adjusted through current accounts of partners in such a manner that the capital account of all the partners would be in their TSR. There's nothing here. We generally do it in current account, no?
Yes, sir. So maybe thereafter from that, after adjusting, you have to use current account.
Sorry?
After adjusting in capital accounts, we have to use the current account.
Yeah. See, one thing what we have to think about is, if none of, right now if you see their capital, it is 410 and 330. It is already not in TSR. So what to do? In the question, they have not told specifically also to do it in capital account, or else you could have done that.
So in capital account only they are given.
What they have done in capital account is the adjustment they have done in current account. We'll do one thing, guys. You know what we'll do? Let's do all the adjustments as given in the answer in capital account only, and the adjustment we'll do in current account. We'll see. I'll come back about it later, tomorrow.
So generally we take it as bank account. So instead of that, we have to take it as
In bank account.
like for
Generally, if they have not told, in question they'll tell. If there is excess or deficit, withdraw or put it out. Then we use bank account. Here they have not told withdraw or bank. Adjust, let it go to current account and they have told. So let the current account be disproportionate. I don't care. I want the main capital accounts to be proportionate. So whatever excess or deficit is there, let it go to current account.
So deficit should be brought in by current account.
Yes. Now say suppose 5 lakh is the capital balance. I want to, for it to be proportionate, it should be 4 lakhs. Generally what we used to do, 1 lakh used to put it to cash or bank. Now this 1 lakh I transfer it to current account. So that capital accounts proportionate agirli. Clear? Huh? And that only you are asking till now. Huh? Ayyo. Anyways, man, we'll do it first. Same thing I would have told in the end. Third man adelo. So first we'll prepare. Fatafat we have to do. Guys, all of you have question, no? Huh? So can you tell me what is revaluation credit debit? So first thing, plant and machinery is getting, so it will come in the debit side. 2, plant and machinery account. How much? 50. It is decreased. Next, land and building is getting increased, so it will come in credit side by. Ida. Yarappa 57. Hello, ladies and gentlemen. Please see if the amounts that we are writing is correct. Okay. The plant and machinery is decreasing by 25. 500. Then land and building increased by 1,52,000. Okay. Then provision means it will come in the debit side. So 2. Then unrecorded liability 2. 6,000. Then all the revaluation things done. So profit or loss, it is profit. Directly we can see. This profit will be transferred to partners' capital in their old ratio. Divide it off. Who are the partners? The partners are X and Y. X is cap. Divide it in 5:3 ratio. 73,438. And Y's cap?
44,060.
44,060. So this revaluation. So devaluation profit transferred. Now we'll prepare opening balance. Very well. Here are partners X. Okay. So balance bottom.
4,10,000, 3,13,000.
3,30,000. Okay. Then we have reserves which we have to distribute by reserve. Divide reserves in old profit sharing ratio. So how much it is? 70,000 and 42. Pakka correct, son. Now reserves plans. Then revaluation profit, which is how much? 73 and 44,060. Okay, revaluation. Then we have goodwill adjustment. See, what I do in goodwill is, okay, I directly see, I don't care whether it is admission or retirement. Directly calculate sacrifice or gain ratio. What is the formula for sacrifice or gain ratio? Okay, X, Y, Z. Put all the parties. What is the old ratio of X?
5/8.
New ratio?
5/10.
So new ratio ne gottilla. They have not given us only. So first we have to calculate. See what? See what you can do is New ratio they have not given. So what will assume sacrifice ratio to be?
Same as what
It is same as old ratio. So sacrifice ratio is 5 is to 3. Aita. So however, there is no need to find out new ratio at all because however we are assuming sacrifice ratio only to be. So how much is sacrifice ratio? 5 is to 3. So what is the goodwill adjustment? Goodwill share. It is.
20,000.
Hey, they have already given. How much it is? Goodwill share is 32,000 rupees. Okay. Now this 32,000 will be divided among the sacrificing partners in which ratio?
5 is to 5 ratio.
It will be in sacrifice ratio. What is the goodwill adjustment entry? I've already told. Gaining partners to sacrificing. Who is the gaining partner?
Exactly.
See, if X and Y are sacrificing, that is the new guy who is gaining a share. So entry will be Z's capital, gaining partner account debit to sacrificing X capital and to Y. How much this guy has got goodwill?
32,000.
That you divide among X and Y in sacrifice ratio. That is here, however, directly we found out sacrifice ratio to be 3:2. Nothing is given means old ratio is sacrifice ratio. So let's divide goodwill. So this is the entry we have passed. That is debited. So this side to X cap to Y cap. How much? 20, 12. Then here by Z cap. What? We'll put it anyways. I understand that has come first. We'll put it here. Okay. By Z cap. Z cap is
20.
credited. So it is here X 20. So we have done the goodwill adjustment entry. Then this new guy has got how much money? By
2,72,000.
bank account. How much did he bring? 2,40,000 for capital and 32,000 for goodwill. 2,72,000 is what he has got. So everything done. Huh? So everything we have done. So sure. Huh? Only thing that is pending is the last one. They want the capital balances to be this thing. It should be in proportion. Okay. Now how to do this?
No PS.
We'll find it out. New ratio we don't have. For finding out the proportion, new ratio is important. We'll continue. So how much is new ratio? How can you find out new ratio? Old ratio minus share sacrifice. Correct? So let's do it for X, Y, and Z. For X, how much was the old ratio? How much is the share sacrificed by him? See, first of all, the total share that we have given to Z is 1/5. Out of this, X has contributed how much? How much is his sacrifice ratio? 5/8 into 5/8. Correct? Out of 1/5 which we have given to Z, 5/8 is contributed by X. 3/8 is contributed by Y. That's how we got 1/5. They sacrificed, that's why Z got. Correct? So how much it is? 5/40. So 5/40 into 5 into 5, 25 minus into 5, 25. 25 minus 5, 20. So it is 20/40. Then Y share is 3/8 minus how much he sacrificed out of 1/5 that we have totally given. This guy sacrificed. So how much is this? Again 40 into 5, 15. 15 minus 3, 12/40. Z is new share we already do. We have given 1/5. So we have to make same denominator to take the ratio. So into 8, into 8 if you do, you get 8/40. So the new ratio is 20:12:8. Also 5:3. This is the new ratio. All of you. Now I want my capital to be there in this 5:3:2 ratio. Okay. For that, what we'll do is now see they have just told us to keep the capital in proportion. So capital can be in proportion at whatever amounts. If A maintains 5 crore, B maintains 3 crore, and sorry, X maintains 5 crore, Y maintains 3 crore, Z maintains 2 crore. Is the capital still proportionate? Yes. Then at what amount should I put the cap will be the question. So what we'll do is, if nothing is given in the question, take the new partner's capital as base. How much is new partner's capital?
240,000.
C's cap is 2,40,000 rupees. For how much share?
5.
For 1 by 5th share. For 1 by 5th share. So that means what will be the total capital?
12 lakhs.
Total capital will be 2,40,000. 1/5 of 240 in that. Total into 5 by 1. So it will be, okay, we are taking new partner's capital as base. So total will be 12. Divide this 12 in new profit sharing ratio. So X should maintain how much capital?
6 lakhs.
12 lakh into 5 by 10. So it is 6 lakh. How did we get this? 12 lakh into 5 by 10. New profit sharing ratio. Y should maintain how much? 12 lakh into 3 by 10. That is Z should maintain
2 lakh
2 lakh.
40.
So this is the capitals that should be maintained. So what I do, I'll put the closing balance as these amounts. To carry interval. How much?
6 lakhs.
6 lakh,
3 lakhs.
3 lakh 60,000, and
2 lakhs.
this is the capitals I have to maintain. Okay. Sir, what about the excess and all that we have? So they have told whatever excess or deficit is there, transfer to current account. Let the balance go to current. Don't touch cash. If nothing is told, we'll use cash account. And what we are assuming, if something excess is there, that is withdrawn by the partner, or if there is deficit, it is contributed by the partner. Okay. Now see the balance. How much is X balance? 410 plus 70 plus 70.
73,438.
He has 5,76,438, but it should be 6 lakh. So remaining will be bring it to current account by
26 or 560.
by excess current account. How much?
26 by 66.
26,560. What about Y?
68,006. Excess.
Next excess, huh? So it comes this way. So 2 Y,
Yes.
Y is current. In the question only they have told to adjust via current account. That's why I'm doing. So how much is the excess?
68,006.
68,06.
2.
Is that nothing because we have taken his capital only as base. So nothing. So this is about your partner's capital account. Okay, whatever differences were there because of maintaining the capital in proportion, it is sent to current account. Clear this? All of you? Which proportion?
Capital.
Huh?
Capital.
Hey, you are outside that cheating. Huh? No, not one. You are outside. Hey, simple man. How much is C's capital? See, the thing is, capitals can. This is the important one. All of you also. These capitals can be proportionate at whatever number. 5 koti, 3 koti, 2 koti maintain madadruno, it is in proportion. But which number I should consider? Where should I put the cap? I don't know. So what will I do? I'll take the new partner's capital as base, even if they have not given in the question. How much is new partner's capital? 2 lakh 40. For 1/5 share, he has contributed 2 lakh 40. That means what will be the total capital of it? 1/5 2 lakh 40. Right? Total capital will be 12 lakh. 2 lakh 40 into 5 by 1. Reciprocal you do, you'll get the total capital. 1 by 5. Reciprocal is 5 by 1. So 2 lakh 40 into 5 by 1, you got the total capital. All of you understood why I did into 5 by 1. So total capital 12 lakh. Now you divide it in the new profit sharing ratio. You get this. This you put it as closing balance here, and remaining you transfer it to current account. Okay. Now in balance sheet, what will happen? This updated partner's capital account will come. Then what will happen to this current account? Here current account is debited, so it will come in the asset side, and Y's current account is credited, so it will come in liability side. Okay. Then next what will happen? Next we have revalued everything. All that will come in. The balance sheet you can manage. No, I think we can stop this. One more thing what I have to tell in respect to partnership is your memorandum revaluation account.
Okay, that is a good discussion. So what is memorandum? Sometimes what will happen, these partners, they want us to do the revaluation, but they don't want the book value to get changed. So that means what we have to do? What we have to do?
Same as like a revaluation.
First you do the revaluation normally. Whatever profits you have, that you divide among the old partners in the old partner sharing ratio. Then whatever you have done above, no, do exact reverse. And the increase in assets and all will come in debit side. Increase in liabilities and all will come in Ella ulta. Whatever came here will come in the debit side. Whatever came in debit side will come in credit side. Now, in the first case, if you had revaluation profit, in the second case, you'll have loss. This loss, you divide it among new partners in their new profit sharing ratio. Very important. Understanding? When you do that, since you did everything reverse, the book value also is not altered and the adjustment for revaluation is also done. If you do it like this.
You will transfer the profit also to partners.
Yeah.
Only for existing.
No. The first part
Only
for existing, and the second part, reversed part is for
new ones.
new ones, all the new partners in the new profit sharing ratio. Okay.
So what if there's some reserve, like in the profit sharing ratio only, some of the profit is sent to reserve?
Reserve.
Yeah, there was one question in this.
Tell.
So suppose the profit sharing ratio is 5:3 and like 1/3 of the profit is sent to reserve. At that time, how to do
I don't think sending it to reserve affects it. So what you do is from P&L appropriation account, whatever profits you have certain amount you have transferred it to reserve. Remaining you have transferred it to capital of the profit earned in that year. Done. Then you will do revaluation account. Revaluation account you do normally. Now that you have transferred that amount to reserve, whatever is there in reserve, that you divide it among the existing partners in their whole profit sharing ratio. That's all.
like in memorandum revaluation, you will get losses. So if you get profit initially, next step you get loss.
Correct. See, reserves won't come only in revaluation account.
No, sir, you have to send some share to reserve.
Better, give that question only. We'll do it tomorrow, okay? I'm not understanding the question. Then?
Sir, they were telling one question, no profit should be brought out for the
No profit?
will be transferred to partners.
No profit to be transferred to partners'
They
capital.
will tell you to prepare
Ah,
and they will tell no profit should be transferred to partners.
I don't have to see the question. I'm not getting it. If you have the question, let me have a look at it. Now only if you want. Give it. We'll do it off. I will ask you one more kind of question which I had seen. Okay. Now there are some reserves. There is some goodwill, or there is revaluation profit, whatever. Okay. Now, in case of memorandum, what is happening? Okay. In case of memorandum, we don't want the asset values to alter, but we still want the effect to be given, like goodwill. We are not bringing goodwill to the books of accounts, but still we are doing the adjustments. In memorandum revaluation, same thing. I thought, but we are doing all that memorandum nonsense. Now, sometimes they'll ask, there is reserves amount of 50,000. Partners want the reserves to be appearing in the balance sheet, but still they have to do the adjustment for reserves. How to do it? We'll take one question. We'll take the question if I directly say like that. You have it. Anything. Oh, the first one.
First question.
Which one?
First question.
Aditya, but how to put this on the screen? Photo.
Do we also like that?
Huh?
Taking both sides.
We'll put it in the group. Okay. All of you have sent it. Now we'll see this question.
last question for the day. Come on, guys. Aditya and Bharat were partners. The partnership deed provides inter alia. Inter alia. Actually, it means something. I don't know. The accounts are balanced on 31st December each year. Okay. The profits be divided as follows. Aditya's share is 1/3, Bharat is 1/4, and carried to reserve 5/12. So what is this, guys? It is not something admission or something. Normally, in a partnership, when they have earned the profit, okay, 1/3 will go to Bharat, 1/4 will go to 1/3 will go to Aditya, 1/4 will go to Bharat. Remaining is transferred to reserve. From P&L, we are transferring into reserve. It is what appropriation was. Okay. Then, in the event of death of a partner, his executor will be entitled to the following. Okay, this is a death of a partner case. First, he'll get the capital, whatever is there, that. Then, his proportion of profit to the date of death based on the weighted average profits of the last 3 completed years. Andre, he has died when? In the middle of the year, no? Where date would be given? No data. Here, in that page only, Bharat died on 31st July, but our end of year is 31st December every year. So we have to give him profit till the July from January. January the 31st July, we have to give his share of profit. How do we calculate his share of profit? Based on the weighted average profits for the 3 preceding years. Have they given 3 preceding years profit? 92, 67, 45. 92, 67, and 45. Okay. And they have told weighted average profits. They have only told weighted. So how will you do? How will you give weight? W 1, 2, 3. That's how we'll do the weight. They have only told. Okay. Next. His share of goodwill based on 3 years purchase of the weighted average profits for the 3 preceding complete years. Okay, same thing. We can do it. Reserves outstanding on his death and any revaluation profit. So whatever reserve is there as on the date of death, plus his revaluation share. Now, how much reserves we have as on 31st December 24? 30,000. Okay, 30,000. Then how much would have transferred to reserve? Okay, I understood what is the problem. Okay, we'll solve it off. But we'll read the full question. Any revaluation profit, the profits is given. Then in order to keep the firm afloat, Aditya admitted Murthy for Bharat's share. So Bharat died, no? For that he has admitted a new guy. He is expected to have the balance of Bharat's capital account as his capital. So how much is Bharat's capital? 40,000. So this guy should also give 40,000. And also agreed to bring in the cash for the same. He bought in cash. How much? 40,000. For the purpose of the reconstitution, investments were revalued at 35,000. And out of trade payables, 3,000 is to be written off. This is for revaluation purpose. It was agreed on reconstitution that revalued figures will not appear in the balance sheet. So we have to prepare memorandum revaluation. So show the calculation of Birla share of profit, share of goodwill, and draw Bharat executor's account as would appear in the firm's ledger, transferring the amount to loan. And we have to pay him off. No, we are not paying him off. We are transferring it to loan. So we have to also prepare partners capital account and balance sheet post reconstitution. Henry question, no? Huh? Mana. So we have to basically find out Birla's share of profits. Okay, balance. Correct. Birla is the person who is died. Correct. So they have asked us share of profit, share of goodwill, and Bharat's executors. Okay, first we'll do Bharat's share of profits. Okay, out of share of profits, how much are we giving to Bharat? They have told His proportion of profit to the date of death will be based on the weighted average profits of the last 3 completed years. So completed years is 2021, 2022, and 2023. Okay. So profits is 92,067. 67,045. Now we have to assign weights. 1, 2, 3. So how much is the average profit?
134.
Pata. Hey, time is over 80 minutes.
1 lakh
135.
1 lakh?
34.
1 lakh 35. The total is 2 lakh 69
Yes, sir.
plus 92 ಮಾಡಬೇಕು. 3 lakh 61,000 divided by 6. So how much is average profit? 60,000?
167.
Correct? 60,167 is the profit earned. Out of that, how much is this guy's share? To the date of death based on the weighted average. So 60,167 is the profit for the entire year. But we have to give only till when? Till 31st July. That is only for 7 months. And this guy's share is how much? This guy who is Bharat. Bharat is died, no?
1/4.
Bharat's share is 1/4. So how much is share of profit?
1/4.
Clear,
8774.
87. So this is the share of profit of Bharat. Second, what they have asked? Share of goodwill. How much is goodwill? Same thing. Average profit is 6167. They have told 3 years purchase of the weighted average profit for the 3 preceding years. So average we have already found out. So goodwill is
183,201.
3 into 60,167, which is
183,201.
183,201. This is the total goodwill. Correct? But
18501.
180.
501.
So this is the total goodwill. But this is the entire firm's goodwill. We want only this guy's goodwill. How much is his share?
1/4.
We'll do one thing. There is also the other reconstitution happening. Okay. So we'll do one thing. We'll find out the sacrificing ratio together. The sacrificing ratio is equal to. Now there are 3 partners. Who are these? Aditya, Bharat, then Aditya, Bharat. Only 2 were there. Now we also have Murthy. Okay. Now, what is the old ratio of Aditya? It is 1/3, and Bharat was. What is the new ratio?
So that 1/3 and 1/4 is including the reserves.
It's okay. Ultimately, they are taking that much profit. No, that is their profit share. So you are telling out of the total 1/3, 1/4, and 5/12. If you add all the 3, are you getting 1? Now? Let's see here. Ultimately, it should come to 1. Okay. See, 1/3 plus 1/4. How much it is? Plus 5. Okay. Into 3 into 4. 4 plus 3 plus 5. It is 12. Well, let's say it's 1. So reserve share is 512. So how will reserve be divided among the old partners is the question. So out of whatever profit that is there, so what we have to do here now then? So here only we have to transfer it to the reserve. Have to have a look at it too.
Sections here about us.
Who knows? Maybe. Yeah, you know what? What is the profit? Something is transferred to reserve. Guys, what we'll do now, what I would have done is the ratio which I can consider will be this, not 1/3, 1/4. Same thing, 1/3 is to 1/4 in my opinion is the old ratio. ಅಂದ್ರೆ ರೇಷಿಯೋ ಏನಾಗುತ್ತೆ 4 into 4 into 3 12 4 ಈ ಕಡೆ 3 by 12 by 12. Guys, I will consider 4:3 as the ratio for the purpose of the calculation. Because 5/12 is going for reserve, I'll keep it separate. I'm not touching that. Their old ratio, what I'll consider is 4:3. How did I get 4:3? I took 1:4, 1:3 by 1:4. The ratio will come up to 4:3. Okay. So I'll consider 4:3 to be the ratio. So we'll do it accordingly. So old ratio of A will be 4/7, and this will be. And what about the new ratio? In order to keep the firm afloat, Aditya admitted Murthy for Bharat's share. So that means even after reconstitution, they have the same ratio. So A, how much he has? 4/7 only. B, Damaro, this guy got 3 shares. So this guy 0. This guy has sacrificed. This guy has. So what will be the goodwill adjustment entry? Goodwill adjustment entry is always the same. Sacrificing a gaining partner's account debit to sacrificing. Who is the gaining partner?
B.
So gaining partner. M. So Murthy's cap debit to
B.
Bharat's cap, which is how much is the goodwill? We found out now. 1,80,000 into 501. How much is he losing? This guy 3/7. So into 3/7. 77, 358, 77, 358. This is the Murthy's share of goodwill. Is the answer correct, by the way? Do you have the key? Huh? You have the answer key? Check. Check. If it is correct, we'll continue. Or else we'll see it tomorrow.
Yes, sir.
Correct? So, hey, whatever he has happened did not happen. Huh? What nonsense. So it is 77, 358. So all of you understood, huh? Ultimately you should understood the answer also. I should not do it.
He said profit is.
So this profit is wrong.
Yes, sir.
Share of profit. How that goodwill is correct profit? How much is
So
profit?
then also you have to take the
Oh, acha. Okay. Sorry. His share is how much? 4/7. Okay. How much? Okay, Bharat is
3/7.
Bharat is 3/7, correct. So Bharat's share will be 3/7. How much?
15,041. 042.
042. Correct? Huh?
answer.
So you understood how we took the PSR. I literally took their PSR. A share is how much? 1/4. B share is 1/3. This have converted into ratio. How to convert? Cross multiply. 3 is to Ingittu answer first. 1/3 is to 1/4. So I have cross multiplied. 4 is to 3. And 4 cross multiply 3. 12. The ratio becomes 4:3. I have considered 4:3 for the calculation. Reserves I am keeping it aside. That was a biscuit. Reserve when ishta to that, then ishta. Ultimately, Uribru ratio 1:3 is to 1:4. That I have taken. Okay. So profit is done, goodwill is done then. So goodwill, we have normally calculated the goodwill and we have found out sacrifice ratio. Who is sacrificing? B is sacrificing for M. Andre Bharat is sacrificing for Murthy. So B gave the Murthy gave the goodwill to Bharat. How much? 77, 358. Because how much he sacrificed? 3/7. Correct, Nada?
Yes, sir.
Anything missing? No. Okay. Next. Draw Bharat's executor's account as would appears in the firm's ledger, transferring the amount to loan. Okay. We'll put Bharat's executor. See, for preparing Bharat's executor account, it is important for us to prepare Bharat's capital account. Correct, no? So,
So for capital, we need evaluation.
we do it. Bharat's capital account. Hey, Noda. By. Hey, almost done. Wait. How much is the opening balance of Bharat? Fast, we finish it.
40,000.
40,000. Then his share of goodwill by this guy. Who is the guy?
Murthy.
Murthy's capital. That was how much? 77?
358.
358. Then his share of profit?
Profit is 15,042.
15,000.
42.
I've put it as P&L suspense account. All of you understand why? Because till now we would have not prepared P&L account. So we'll put it to P&L suspense. This will go to asset as balance sheet. When actually we prepare P&L, this share will be knocked off with the P&L account later. We have discussed. Next, profit share is done. Then revaluation. Reserve. How much is reserve? Reserve and revaluation is still pending, no? So first we'll find out reserve. How much is the reserves we have?
30,000.
Reserves we have is 30,000 plus we have earned profit for the current year. In that, some would have gone to reserves. No? So how much is my average profit?
60.
We have already calculated.
6167.
Here, how much it is? 60,167. Out of this, only 7 months profit. 7 months. And out of this, how much will be transferred? 5/12 of it. So 5/12 will be how much?
14,624.
14,624 will be transferred to reserve till the date of death. So total reserve is 44,624. Out of this, his share will be given. His share is how much? What is the ratio? Da?
1/3.
3:4.
3:4 alva. Who is retiring? Bharat. So 4/7 into
3/7.
3/7.
Bharat share 3/7
3/7.
into 3/7. So how much is his share? 19,120.
25.
So this I will give it to him by reserve account. 19,125. Then what is the one thing I have to give him? This thing, revaluation profit. So how much is revaluation? That we can find out like that. How much is revaluation profit?
Sir,
Ah,
in the answer key that 14,624 is not added.
to the reserve.
Uh,
Why? Da? They have clearly told no here. See, reserves outstanding on his death. Correct? No, this much should be considered in reserve also.
But in the answer key,
But this is sensible thing to do. Nonsense people, I cannot follow that. Clearly they have told till reserves on the date of death, what will be the reserves accrued? So out of the total profit, that is shared among the two partners and remaining is transferred to reserves.
so maybe because it's not
Actually happened. It is notional. That is one assumption that we can make. So they have not considered that. So what assumption they are taking is, see, for the current year, actual profit we are not taking. We are basing this profit based on the previous year calculations. So that's why reserves will not be added. That's why they are taking the old reserve balance only. Okay, we'll go with that assumption. How much?
According to that, 12,857.
12,000?
857.
This should be 12,853. So they're assuming that money, profit share has not gone to reserves, which is not a correct assumption in my opinion. Okay, 12,857. So here how much will come? Then revaluation profit, how much da? Investments were revalued at 35. It was 40. That means it is decreased by 5,000. So minus 5,000. Plus trade payables is written off. That means decrease in liability. It's a profit. Plus 3,000. Anything else? So your revaluation losses out of this that guy's share is
850.
which is 850. 857. So this will also come in debit side to evaluation account 850. So what is the balance? So the balance will be given to Bharat executor. How much?
It won't come because it's numerator regarding.
Oh. Nonsense. You have to prepare that only, no? Hey, wait. Hey, wait.
So we'll have to take offline, sir.
Wait. So two things have only happened. One is investment has been decreased by 5,000. Two, investment 5,000. Here by trade payables 3,000. So we have loss of 2,000, which we will transfer it to this thing by
Profits. Last transfer.
in old ratio. Okay. Divided fast. A and B in 4:3 ratio. 1143 857. Then 2 trade payables 3,000 by investments 5. So here we'll get a profit. So 2 partners. Now who are the new partners that we have? B is gone. Now we have A and M. So it will be divided among A and M in same ratio because the new ratio is also
Same.
4:3. So 1143 and 850. Hey, ultimately from this guy 857 will only go, no? So how much is your Bharat's capital account balance? 857 has not come, huh?
Yes.
Nonsense. I knew this would happen because revalidate memorandum ಆದ್ರೂ ಮಿಸ್ ಆಗಲ್ಲ ನೋಡಿ ಇಲ್ಲಿ ಬಿ ಇಂದ ಹೋಗುತ್ತೆ ಬಟ್ ಮತ್ತೆ ಇಲ್ಲಿ ಬಿ ಇಲ್ಲ now B will come.
Sir, no, sir. After taking the profit, we should come. No, sir. A, B, and M should be distributed.
Why B is gone, noda. Death. B is died. That's why M came in. Hey, hello. Death plus admission we are doing. B died, noda. The new partners are A and M. So here 857 will come. So how much will be transferred to Bharat's executor? 1 lakh?
Sir, there is a profit there to transfer by.
2?
Okay.
399.
B is not there, no? So we are transferring only to A and M, the new partners. A, B group, B Oda, A F. Now Bharat executor ಎಷ್ಟು ಹೋಗುತ್ತೆ by Bharat's capital 144.
399.
But this will entirely be transferred to loan.
399.
399. This will be transferred to loan, no? Bharat executor would appear in the firm's ledger transferring the amount to loan. So to loan account 1 lakh. That's it. Done. Matching da?
Yes.
Pakka. But it was a crazy question actually. ಈ ತರ ಎಲ್ಲ ಕೊಟ್ಟರೆ ಮಾಡೋದು ಅಷ್ಟೇ.
Sir, we were expecting to do this in 15 minutes.
Huh?
Sir.
Yes, sir.
Yes,
sir.
You have to practice that.
15 minutes marks.
Only for 10 marks.
Bye guys, see you tomorrow.
So 9 o'clock.
We have partnership and we have company. Okay, we'll do 9 o'clock. 9 o'clock tomorrow. Tomorrow will be the last day.